actually the balance that's available from December 31st, 2013. So now some of these numbers may have changed, I think, from our original meetings with the mayor and council, because at the time the financial statement was still being completed. The financial statement was in fact filed after we received the net valuation taxable amount because we were waiting for that new value. That amount actually gets inserted in the financial statement. So therefore, the numbers that historically some of the council members may have in front of them have changed slightly, but not dramatically. So the $3,114,000 is the new number at December 31st. And if you look across the screen, wow, that number is very, very high. That looks fantastic. Now, the one thing that we want to take a step back is, how is that fund balance created? In the city of Brigantine, unfortunately, the majority of the money that's sitting in this fund balance was the result of bonding for the tax appeals. As we had the conversations the last 2 years, the city took advantage, and they needed to take advantage of the opportunity to bond for the tax appeals. So in 2013, we ended up having to do $1.4 million in bonds and roughly $1.8 million in 2012. So we made in 2013 the first payment on the $1.8 million, and now in 2014's budget, we'll be making the first of 5 payments on the $1,465,000. So that's something that we want to make sure that we're paying attention to, that yes, we have $3.1 million in surplus. Well, why don't you use it all? Let's use it all and balance the budget. But you have to remember that what created that were these bonds, and we're paying those bonds back over time with interest. So we want to make sure that we use that surplus reasonably, and keeping in mind that when you do put together a 2014 budget, we're also looking at the impact for 2015, 2016, and 2017. You want to make sure that the city does not run into a situation where they need to spike taxes. Unfortunately, that can't actually even be done anymore because of the 2% levy cap. But once again, we can cover that in a few minutes. The tax appeal proceeds, once again, make up the majority of the balance available. So this budget that was presented includes $1.4 million in surplus being used to balance the budget. That would leave the city roughly $1.7 million. When we try to give, a barometer of what's a decent number to keep in your surplus, we sort of look at the budget and say maybe something between 5 to 10% of the operating budget. For those of you who are familiar with school districts, statutorily they're only permitted to keep 2% of their surplus, which is unfortunately not fiscally sound, but the reality of New Jersey budgeting is what it is. So when we look at our 5 to 10% numbers, you can see 5% of the operating budget is roughly $1.4 million, and 10% would be $2.8. Now, would we love to be at the 10% side of it? Sure we would. But we also have to take into consideration that right now we're decent with the 5 to 10% number. How else is fund balance created? Revenues that are collected that exceed the budgeted amounts. And we'll actually have a slide in another few minutes here that we can show that to give you a better example of what we're talking about. We also have miscellaneous revenues that we don't budget. So there are certain fees that we collect that we don't necessarily build into the budget. I think that was roughly 200 and some thousand during 2013. We also have our reserve for uncollected taxes. Now, the reserve for uncollected tax number happens to be what I always describe as the insurance policy. Unfortunately, when we collect taxes, not every citizen pays their taxes, so our collection rate isn't 100%. But we do have situations where we have to pay the county tax bill and the school tax bill, and that has to be paid at 100%. We don't get a discount from them if our citizens don't pay. So the reserve for uncollected taxes is a number that we build into the budget to ensure our ability and that we have the cash flow to make sure that we pay 100% of the school and county taxes. The unspent appropriations. There are times where you may build positions into a budget and not necessarily fill those positions during the year. So if those appropriations go unspent, they eventually lapse and become part of surplus and help us in future budgets. So this is the fund balance history of the current fund, which is the main operating fund of the city. Now moving to the next slide that has our nice little water spigot on there, those of you may be able to determine that this is the water sewer utility. So when we look at the history of the water sewer utility from 2010 to 2014, during that time period, there was an increase in the rates, which is why the fund balance did spike up. And now we ended 2013 with $923,807. Once again, I said we ended 2013, and that's why it's in the balance available column for 2014. Right now, the budget as presented, the manager's budget as presented, is utilizing $275,000 to help balance the water sewer budget. Because in New Jersey, as the case that we like to be conservative, one of the rare times that we probably are, we do have to have a balanced budget. Unlike the federal government, we have a balanced budget. So that means our revenues must equal our appropriations. So when we're sitting here looking at this, we can see that we're using $275,000 to help balance the budget in the water sewer utility. There's also a line up there that says utilized CF. What does that mean? That is funds that we utilized in the current fund to help them balance their budget. So in 2013, we utilized $235,000 of surplus from the water sewer utility to help balance the current fund budget. Well, why would you do that? First of all, you're permitted to do that by statute, and the Division of Local Government Services allows you to do that. But one of the main reasons why is there is a tendency to allocate some of the costs to the water sewer utility. There are positions here in the city that are cross-purposed. So some of the salaries do get allocated directly to the current fund, but you can't necessarily always guarantee that the tax collector who is collecting for water and sewer is devoting exactly 62.7% of her time to the current fund and the remaining portion to water sewer. So when we look at that, there is a feeling that, well, since we can't nail that down exactly, the utilization of surplus that's generated in the water sewer utility, we're going to turn over to the current fund. And one of the items that was discussed with Mayor and Council during our meetings to continue that practice. So it's very possible that the final budget that we end up with, or the budget that gets introduced, will in fact include an additional use of surplus. Historically also, if this were to be a private water utility would in fact be paying some type of tax back to the city, and that would be generating, in essence, property taxes for us. Because this is municipally owned property, they don't do that. Second of all, any normal, or I guess the private enterprise would also be paying funds to the state of New Jersey, which would be reverted back to us in what was previously known as the gross receipts and franchise tax, and now is the energy receipts tax, which makes up our quote-unquote state aid. So because we don't have a private utility, we don't receive either of those funds. So then we go through the process and say, well, should they be sending money back to the current fund as part of that operation? And that should be built into the rates, because if you had Aqua America or another private enterprise, their rates would include that built into it because they're certainly there to make a profit. So this is why there would be a reasonable expectation to return some of the water sewer utility surplus back to the current fund. After that long-winded speech, we move on to the C, that currently 10% of the budget is in fact only $626,000. So if the city were to utilize the $235,000 additional funds, they would still fall within our 5 to 10% barometer. So that's the good news. But why has fund balance decreased? There has been greater support to balance the current fund, to the current utility operations. There were lower unspent appropriations. In essence, you don't like to use the term padded, but the budget was a lot tighter. And that's why we have less money going back to surplus. So as you can see, we were at 1.3 million. We ended last year, and we only now have 923,000. And then the last item we have posted up there is moderate support to balance the current fund operations. Okay. City of Brigantine, the Lynx Golf Course. The golf course utility, if we look at this and we go back to 2010, and we take it and we go through 2014, we can see that the balance available in surplus has diminished over time. We ended December 31st, 2013. Notice we use the term balance available, which is roughly $2,000. Those individuals who are financially astute may look at the financial statement that may or expected to be posted to the website. I'm not sure if we have it up there yet. But that would actually show you just over $200,000 in surplus. Well, then why does that say balance available only $2,000? Well, because of the way New Jersey financial accounting works, the amount that we have posted to the screen is the amount that can be utilized to balance the budget. So unfortunately, only $2,000 of that surplus amount can be utilized to balance the budget. We ended 2013 with an actual deficit in operations of roughly $187,000. To balance the 2014 budget, if you recall, I had previously stated we needed to have a balanced budget. Revenues must equal appropriations. To have a balanced budget in the golf course utility for 2014, the current fund, which is general taxpayers, need to support the golf course utility in the amount of $765,000. Okay? The one question that is usually asked is, if we expect to have a good year in the golf course, can we anticipate better revenues? The way New Jersey budgeting practices end up being, revenues anticipated cannot exceed your prior year collections. And we do have a couple of slides later on to show you some of the golf course history. Moving on to back to the current fund side of the budget. This is a breakdown of the revenue side of the budget. And as you can see on the screen now in this pie chart, the largest chunk comes from you, the local taxpayer. Unfortunately, state aid has diminished over time, and there are not many other non-tax revenues that the city does generate. So when we're looking at the budget, yeah, we're talking 76% of your revenues are made up of local taxation. Okay, comparison of revenues now. As we look at the draft budget, we just want to do a straight up comparison to 2013 to 2014. And as you can see, I previously told you that we are increasing the use of fund balance anticipated as a revenue from $700,000 in the 2013 budget to roughly $1.4 million. So that is a 100% increase. Now, why are you doing that? Why are you using so much more surplus? Well, when we talked earlier, we were telling you that we do, in fact, have the next round of payments on the tax appeals. We also have the tax appeal bond from 2013 that we'll be making the first payment on. So therefore, utilizing this surplus, we still try to target them for these one-time expenditures and try to offset those items. We're also utilizing this amount of surplus, additional surplus, in an effort to help offset the impact of the $765,000 appropriation needed to help balance the golf course utility. Moving down to miscellaneous local revenues, you can see it shifted from roughly 1.9 to $2 million. Not that dramatic of an increase, but we did have a decent year in terms of our beach and our 4x4. And we do have a slide to review everyone's history on that relative to the community disaster loan. We'll go through that in another minute. I keep saying another minute and it turns into another hour, but we'll try and proceed as we can here. State aid revenues, they did slightly increase. Now, why did they increase, sir, when you just said that the history has been state aid has been decreasing? State aid revenue on this line item includes school debt service aid. Because the school had issued debt service, a certain portion of that is helped or funded by state aid. And that state aid dedicated to the school debt service flows through to the city, as I described earlier when I was telling you about a type 1 school district. So the increase in state aid is a result of the additional school debt that was issued, and therefore as their debt increased, so did the support that they received from state aid funding. And that's why we have a 7% increase in state aid. Not because the city itself was receiving any additional aid, it's as a result of the school debt service aid. Construction code fees, $275,000 versus roughly $300,000 in the 2014 budget. When we look back at the Uniform Construction Code, we'll actually have, as part of the slide that we're talking about the community disaster loan, we'll show you what that number is. And that number has been pretty consistent. I know there has been conversations about holding the line on the construction fees for properties that have been damaged, but I think the projection from the city finance office is that the $300,000 is still a good number and that you'll be able to meet those revenue and those expectations. Other special items of revenue, a drastic 55% reduction. What is that all about? Well, and when you look at that line item includes grants. Currently, as we put together the February 7th edition of the manager's budget, we didn't have any grants. What will happen is the finance office has received some information. We will be putting some of those grants in the budget, and that will be part of the introduced budget. But the $1 million difference is the fact that if you recall in 2013, there was a major project that occurred on Brigantine Boulevard, and that was funded by a county grant of over $1 million. So that was a one-time item in the 2013 budget, and that would explain the majority of that decrease. So when you look at that number, what happened, what did the city do wrong? It's not that. It's simply timing and the fact that the grant was for 2013, and here we are in 2014, and we don't have a similar grant. So do not be overly alarmed by that 55% decrease. Receipts from delinquent taxes were pretty consistent with that. We anticipated in our budget $500,000 last year, and we would think $500,000 is also reasonable for 2014. Then you look at the local line item for the amount to be raised by taxation, and that was the number that we were focusing on earlier, the $1.7 million change as part of the manager's budget, the $22.2 million to $23.9. The next line item is the amount to be raised by taxation school. Well, why did that drop dramatically? Once again, the school budget, we put in our budget, our city budget, the amount for debt service related to the school. So this amount is reduced because they actually had a payoff of one of their EDA projects. So therefore, their debt service did drop. And that's why the amount to be raised by you as a taxpayer is decreasing, because their debt service is being paid off as we go through time. So that's why that represents a decrease of $477,000. Moving to the next slide, you can just see here, this is a comparison of budget revenues, once again, still staying in the current fund. And it shows you the history from 2010 to 2014, pretty much of the line items that we just reviewed on a comparison basis between 14 and 13. So this shows you a 5-year trend. It shows you fund balance previously in 2010. We utilized $1.3 million. 2011 as much as $1.5 million. So the $1.4 million, when you look at the trend over time, is not that unrealistic. Once again, looking at miscellaneous local revenues, roughly between 1.9 and 2.1 million, pretty reasonable. State aid revenue sort of fluctuates. You can see in 2012, 2013, exactly the same. Construction code fees over time have actually increased, so that's been a positive. Other special items of revenue are, once again, the disparity that we have, timing of grants. We would have had some one-time grants in there. And our receipts from delinquent taxes. One of the things that I want to stress, when you go back and look at uniform construction code fees or even receipts from delinquent taxes, you can see that the budgeted amount has actually crept up. And what that does, by increasing these budgeted amounts, that means we were returning less to surplus. So if we go back to 2010, and just for instance, we may have had $180,000 in revenue with a $175,000 budget, we would have been putting back $5,000 to surplus. Well, if we only end up with $300,000 in revenue in 2014, that means we're putting nothing back to surplus. So even though budgeted amounts have increased, it's also been in an effort to try and, I guess, keep the tax levy as low as possible, but once again, not returning dollars to surplus. So it's a balancing act that the city has to do to make sure that we can at least return some funds to surplus. Once again, this conversation is all about the revenue side of the budget. The appropriation side of the budget we will be getting to shortly. So, one of the items, and I apologize, we tried to emphasize the red numbers, so if you're looking at it on the screen here, the middle column, it says 2013 realized. We sat here at several of the budget meetings last year, and we were talking about the process of what was the community disaster loan and why were we doing that. and it made no sense that we could have all these beach fees or 4x4 vehicle fees and construction code and municipal court. So if you recall our history that we were talking about this, we can see that in the 2013 budget, we put beach fees at $380,000, beach vehicle permits at $440, construction code at $275, municipal court at $155, and the community disaster loan at $325,000. So in 2013, what did we actually realize? And those numbers show that we actually exceeded beach fees as budgeted by $161,000. We exceeded beach vehicle permits by $176, exceeded construction code by $65,844, fell short on the municipal court by roughly $20,000, and then the community disaster loan. We did not need to apply or draw down the funds from that $325,000 because beach fees and beach 4x4 vehicle permits actually met prior year expectations. So therefore, it was a wash, as we had hoped it would be. Now, had the beach fees not been anywhere near $540,000, or if the 4x4 vehicles weren't selling because of the bad press that all the beaches in South Jersey were closed because of Sandy, we would have been able to draw down money, that $325,000, to help balance the budget. When you look at these account line items, we still came out ahead by $57,000, and that was returned to surplus. So we felt that we had actually achieved our goal by making sure that the budget was in fact a conservative approach, but an appropriate fiscal approach last year. So this next slide, actually, you probably do not have in your printouts. Maybe you do. I don't think you do. This is something that I forgot to add in here, but I wanted to show that we have a history to show both budgeted and realized amounts from 2010, 11, 12, and 13. So because you don't have it on paper format, and you probably don't have it if you're looking at the PDF on the website, this information we will probably send down to the city separately, but it shows you the historical trend of what has been budgeted in beach fees and what has been realized in each category. So the red line is the budgeted, the orange line is the realized. So the historical trend for beach fees, $536,000 in 2010, $539,000 in 2011, $529,000 in 2012, and we did achieve $541,000. So not too far off. We ended up with a better year than we had expected, which was always good news. The beach vehicle permits also went from 560 in 2010 to 570 to 601 to 616 in 2013, and we certainly need these trends to continue in 2014 because we're now basing the 2014 manager's budget on these numbers, and we're not including any of the community disaster loan proceeds to balance the budget. So this is now, we're in essence going back to how we previously budgeted in 2012. Court fines, unfortunately, at the very bottom there have decreased steadily from 213 down to 199, down to 171, down to 134. I say that from a fiscal standpoint, but certainly from a traffic violation standpoint, the community hopefully is a little bit safer as a result of that, and we don't have the fines. So construction code fee, just looking at historically, $246,000 realized in 2010, and as of 2013, we ended up with realizing $340,000. So once again, I have a little asterisk out there. The 380 for beach fees budgeted was reduced by roughly $140,000. So had we actually kept $140,000, if you take $140,000 and 380, that would have been roughly $520,000. So we would have been able to put some funds back to surplus still. A little math, I don't want to confuse you, but this is just wanted to show you the historical trend here for the four fees that we purposely reduced in the 2013 budget for the community disaster loan, which we did not utilize. Showing you a history trend here of the tax amount, steady, no major spikes. Unfortunately, I'm sure I as a taxpayer and any taxpayer in any part of New Jersey would love to see the trend going in the opposite direction, not on an increase but on a decrease. But as we've discussed, the state aid figures have not been where we would hope they would be. Moving to the appropriation side of the budget, you can see that 75% makes up general operations. So we'll go through in another slide here and talk about some of the general operations. But you can see roughly 12% of the budget makes up our municipal debt share, and roughly 4% is the school debt service. We also have our reserve for uncollected taxes, which is 4.6% of the budget. Once again, the reserve for uncollected taxes is our little insurance policy for those individuals who don't pay their taxes timely to ensure we have cash flow to pay the county and school tax their 100%. So once again, 75% we're looking at. So what makes up general operations of the budget? For those of you who can actually see that small print, remarkably, from this distance I can actually still see that. It does show that public safety makes up almost 37% of your budget. Not uncommon in communities to have a large portion of their budget taking up the public safety section. I think the next largest share, if I'm looking at that quickly, looks like it could be our statutory expenditures in our Public Works Department, roughly in that 12 to 13% range, but my eyes are pretty far from a distance here. I can't really make that out. I think that's right. So when you look at the pie chart, once again, you can see that in a general operations scenario, we have public safety, we have public works, we have our health and human services, some parks and recreation, utility costs, the operations of the court. So those are the items that are making up our general operations. Once again, seeing that public safety, almost 37%, public works 13%, and statutory expenditures. Statutory expenditures are the payments that we make for pension. We have a police and fire pension that we pay. We have a public employee pension amount that we pay. We have a lifeguard pension that we pay. And it also includes the amount that we pay for the employer's share of Social Security. As you would in any normal enterprise, if you're a business owner, you are responsible for paying 1/2 of the share of your employees' FICA/Medicare. Moving on to a comparison of budget appropriations. This just wanted to give you a straight up and down comparison between the 2013 original budget compared to the 2014 manager's budget. So as you just scroll through some of the line items, you can see insurance right now has the largest trend increase. And there could be some modifications to the budget. We have the JIF assessment and whether or not all the amount needs to be allocated to the current fund or partially to the water sewer utility. That's something the finance office will once again review to make sure that we're allocating that properly. You can see an increase in public safety, an increase in public works, parks and recreations. You see under miscellaneous a large increase of $775,000. So when you see that 106% increase on the miscellaneous line, think back to the conversation that we sort of had earlier where the miscellaneous line items now include the deficit that we have to use to support the golf course, which was roughly $765,000. So once again, that's really what makes up that large difference between the miscellaneous line items. Miscellaneous line items happen to also include our reserve for tax appeals. And as you may recall, in 2013, that was the first time that we included a reserve for tax appeal amount in the amount of $400,000. We also included a $200,000 line item appropriation for the payment of accrued absences. When you have individuals retiring from the city, there are certain costs that have been granted to them through time that we now are responsible for paying as they go into retirement. So we had $200,000. That's also part of that miscellaneous line item. Moving down to the statutory expenditures, you have a slight increase there. The pension amounts did, in fact, I would think both increase, but there had been talk during the governor's address that there is a possibility that the pension bills may actually be revised and reduced. Once again, whether or not that's fiscally prudent on the part of the pension system, I defer. I don't make any political comments relative to that. But it is possible that when we move to an introduced budget or even perhaps the eventual adopted budget, there could be a revision for the pension bill. Okay. You can see that the grant line items, as I had indicated earlier in 2013, we had roughly $1,175,000. Right now we have nothing in 2014, but as we introduce the budget, that number will change for the grant information we do have on hand. And as you move down, you can see the reserve for uncollected taxes, the debt service numbers. Our debt service number did, in fact, increase, and we have a slide or two on our debt service in a moment. But once again, keeping in mind that we had the tax appeal bond that we are now making another payment on, payment number 2, and then the tax appeal bond from 2013 where we're doing payment number 1. Okay, just trying to put together a thumbprint of some of the salaries and pension data to give us a barometer of what we have in the current fund. This is actually the current fund only. And you can see that salaries and wages, for those of you who actually have the manager's budget, we tried to put on here what page number you can find some of this information from. So you have salaries and wages on sheet 17A. You have salaries and wages on sheet 25. We have employee insurance from sheet 15. We talked previously about the employee pension program, so you have the public employees, the police, fire, the lifeguard, and then you also have a combination of Social Security and unemployment taxes. So when you look at the 2013 budget and the 2014 budget, you add those numbers up, and roughly 56%, 57%. You can throw numbers back and forth as to how you came up with that 57%. Do you include the school debt service? Do you not include the school debt service? But if you're just looking at the budget in total, roughly $17.7 million is made up of costs relative to salaries and wages and employee benefits. Roughly 57. In the past, it's been, I think, as high as 2/3. I remember conversations about that in previous budget presentations. So roughly 57%. And you can see as you go through some of the percent changes, you can see the public employee pension bill did increase 22%. The police fire pension increased almost 6%. The lifeguard pension roughly 14%. But once again, keep those numbers relative when you look at that, a $3,000 increase in the lifeguard pension or the DCRP, which is the Defined Contribution Retirement Plan, an alternate to public employees. $3,000 is not dramatic. So once again, when you look at these percentages, don't let them guide you. Look at the actual increase or dollar decrease to be your guide. And the only reason we added the various other expenses and the grants and capital is so that anyone who's really has nothing better to do with their time, they can go back and compare this slide to the previous slide to see that we came up and we actually did include all the costs. But looking at the very bottom of the screen, you can see from a total appropriation standpoint, 2013's original budget, comparing it to the 2014 budget, the budget itself is only increasing approximately 1%. Not that dramatic when you look at the costs. We'll have a question and answer period after we're done the slide. Sorry about that. Moving on to the City of Brigantine. Yeah, they wanted me to move along as quickly as possible here. The City of Brigantine 2014 draft budget. We just want to once again reemphasize that one penny is $323,000. You have an average assessment still at $366, as we talked about earlier. So when you look at some of the budget accounts, the insurance line, the pension line, the debt service, and the golf course, what does that really translate to in terms of dollars and pennies and things like that? Well, the average impact, so if you happen to be the $366,000 assessment, which if you are, great. If not, you have a much larger burden to pay. But the insurance increase is roughly $53 to you. The pension increase is about $22. The debt service increase is roughly $45. And the golf course deficit to the average taxpayer is going to cost them $87 a year. So that's just to try and give you some perspective. Once again, these numbers are all fluid. They will be changing as we go through here. And moving quickly back to the water sewer budget, we just wanted to show you the trends here for the rents and the water and the sewer. When we had first met mayor and council, we had different information. Subsequent to that, we've had to make some changes, but this information is still the information that's in the manager's draft budget. It will actually change a little bit. There were some postings to the water rents and the sewer rents that were not correct at the time that we had the information. We've gone back and made some adjustments for the city. But in this case here, this is the water sewer budget. Once again, it has to be balanced. So you can see that it's roughly a 2.4% reduction from 2014 to 2013. Once again, we always put that provision here. That's the draft budget. Things will probably change. But you went from 6.4 million down to 6.2. Is that 2.8 or 2.6? I can't see that from here, but that's the water sewer budget. Moving on to the golf course budget. One of the situations that we've been talking about previously as we've gone through this presentation is the deficit that did in fact occur. So when you look at the line items here, you see the fund balance anticipated in 2013. We were able to use $365,000 to balance the budget. If you hearken back to that original slide, we only had roughly $2,000 available to balance the budget. Really no point in putting that $2,000 in there because it's meaningless. You want to keep something in fund balance. So therefore, there is nothing anticipated in surplus for the 2014 budget. That's why it's zero. Golf course charges are $900,000. Once again, why is that $900,000 and we had budgeted 1.14 last year? So you can see here it's 1.14 and we're only going to put in $900,000. Once again, we only had roughly just over $900,000 in revenue from the golf course operations. So the fees that came in did not meet last year's budget. So we didn't make $1.14 million in golf course charges last year. We made roughly 900 and some thousand. So we have 900,000 budgeted for 2014. We have a reserve for debt service line item on here. There was, in fact, in 2013, an ordinance that was put together and passed by the city to help repair and refurbish and, I guess, go out and replace some of the equipment that was lost during the storm. We did, in fact, receive some insurance proceeds. So therefore, that money is being utilized to help pay for the down payment that was necessary in last year's budget situation. Going down the salaries and the OE, that pretty much is your management company, the payments that we have over there. The city, to the best of my knowledge, and either the city manager or the CFO can correct me during the presentation, but those line items are pretty much the management fees. We're not really allocating any of the cost if Public Works happens to be over there doing some type of small repair or upkeep. We're not really allocating those costs to the best of my knowledge. Debt service, you can see the trend up as we continue to pay off the purchase of the golf course. It's mandated that we make these payments. So therefore, we're making a principal payment of $340,000 in 2014. And my memory isn't always that good, but I think 17 or 2018 was the payoff date for the debt service, and Scott's going to look me up. You know, he's going to look that information up for me. So by the time I get done here, I'll be able to tell you what that information is. So you can. 2018. So we still have debt service payments to make. So worst case scenario, you thought you'd close the golf course and we would still have to make payments for the debt service till 2018. That's just something to keep in the back of your mind, but we still are responsible for those debt service payments. Moving down to the deferred charge, you can see the emergency authorization there, that $14,000. That $14,000 is in essence the payment that we needed for that bond ordinance. The bond ordinance was done last year, but it required a down payment. When you do a bond ordinance, generally a 5% down payment is required. In a utility, normally that's not the case, but because this utility is not self-sustaining, it's in a deficit situation, they are considered not self-liquidating, so they needed to have a 5% down payment. They did not have anything in the budget for that, so therefore you are allowed to do an emergency, and we're raising that in 2014's budget, and we're utilizing the insurance proceeds that came in to help pay for that emergency in 2014. Social Security and the unemployment information there are also relative to the employees that they have through the management company. The deficit in operations in prior years, you can see that number is $187,000. The way New Jersey's municipal accounting works is if the utility is unable to sustain itself, if it came short, in this case we had a deficit in last year's operations, we need to raise that in the 2014 budget. So you can see it was $43,000 for the 2013 budget, which meant that as of 12/31/2012, they were $43,000 in deficit. 2013 ended with a $187,000 deficit, and we're raising that in the 2014 budget. So you see the appropriation side of the budget totals roughly $1.68 million. We had talked earlier that revenues must equal appropriations. So when we go back up to the revenue side of the budget, and we have our $900,000, and we have our $16,000 or so from insurance, that leaves us a huge hole, and that hole has to be funded through the current fund. And that's the $765,000 amount. That was a miscellaneous appropriation in the current fund. It's a revenue in the golf course utility fund? I don't think I see any eyes glazed over yet. I'm just kidding. Here we have a trend of the golf course charges. The operations began roughly in 2002, if I can see that from this distance, and peaked in 2007. And unfortunately, we see a downward trend in terms of the revenue. So the 2013 year, we ended with $904,000 in revenue. So if we go back and look at the budget slide that we had on here, remember, that's why we have $900,000 here in 2014 budgeted, because we ended 2013 with $904,000 in revenue. We can't have a budget amount in excess of the 904. Even if the golf course manager thought, I'm guaranteed, I know I'm going to get $1.1 million or $1.2 million in golf course charges, the way New Jersey operates when it comes to a recreation utility, you simply cannot base it on that. You have to base it on prior collections. If this was the same situation with the water sewer utility and we had a deficit and we needed to raise rates, the CFO would be able to go through and say, I have 1,000 sewer units, I'm raising it by $5, multiplying it out, I'm going to collect that amount. That can be inserted in the budget, but because this is a recreation utility, it simply cannot be done, and we can base the budget simply on the prior collections. The next slide is just an emphasis to see the red zone. Unfortunately, if you're looking at a black and white copy, you can't see it, but you can see that the golf course charges make up certainly the majority of revenues through history, and the yellow has trended to be the amount of surplus being utilized. So steadily increasing from 2008 through 2013, the use of surplus to help balance the budget has been a budgeting aspect that has been used by the city. Let's talk about debt for a minute here. The debt picture isn't as dramatically overwhelming as you might think it might be every time we're sitting here talking about a tax appeal bond or bonding for the accrued absence liabilities. We look at here, we can see a history of debt from 2009, and there is simply no way that I can see that slide from here, so give me a second as I try and come up with that. But we have a trend here to show you. Unfortunately, we shifted how we're presenting this, so now we're working from left to right. So on the left-hand column is our 2013. I do apologize for those of you not sitting enough or close enough to the screen. You probably can't see this either. We have the red circled number for 2013 at December 31st is $46,786,000. That is the amount of gross debt that we have on the city's annual debt statement. So that actually has trended down since 2010 at a high of $56 million. 2011 was down to about $49.8 million. 2012, $47, and now we're at $46.7. But just emphasizing at the very bottom of the screen, we do want to point out that this does in fact exclude special emergency debt. So the amounts for our hurricane slash superstorm and the payments that we had for the accrued absences are items that actually are excluded from gross debt. I won't get into the technical explanation of it, but to suffice it to say, the 46, even though we say it's gross debt, there are a couple of things that are still out there in terms of debt. You can see the middle line there. We have a line for allowable deductions. So what the allowable deductions tend to be is our school debt. It's also debt from any utility that is self-liquidating. So as we sort of had our discussion earlier about self-liquidating, we know that the water sewer utility is self-liquidating. The golf course utility is not self-liquidating because it's not covering its operations. So therefore, the debt relative to the golf course utility, which was roughly $2 million something, is part of this net debt. So it's part of the 28 million. We can't take that as a deduction. The reason why a utility would be considered a deduction is because that utility is able to pay for its debt service on its own. So the water sewer utility, through its rates, it's collecting funds, it's meeting its budget obligations, and it's able to pay its debt service. Unfortunately, the golf course utility is not in the position to do that, and that's why we have the amount appropriated to cover the deficit both in the current fund. So the net percentage is only 0.779. You're permitted to have 3.5% of the town's value. So if we jump, which I won't yet, but I'll cover that in 1 second. You can see at the bottom there we have the allocation of the debt. General capital fund is roughly 33 million, water sewer utility 11.1, golf course utility 2.5 million. So that adds up to the 46.7 million that we have in gross debt. So general capital is going to be a lot of the items that are relative maybe to public safety, to computer equipment. There's a long list of items that you can go through, and that's supporting the infrastructure of the community. The water sewer utility, once again, that's debt for infrastructure in the water sewer utility. The golf course debt service pretty much is the payment for the purchase of the golf course itself and some of the equipment that they've been utilizing through time. You know, why do you actually issue debt? Because there are future users of these infrastructure improvements, and you want to spread that cost over time because not every current taxpayer is going to be here in 2 or 3 years when you're still utilizing some of the items that you purchased. So that's why you go through a debt scenario. So once again, the golf course utility is not self-liquidating, and that's why it's part of the gross and net debt of the city at this point in time. Moving to the next slide, hopefully we can get there. The exclusion of special emergency notes. This was one of the things that I was talking about on the previous slide. So we had a tax map and the revaluation. We had Hurricane/Superstorm Sandy and the contractual severance liabilities. So that's additional debt as of 12/31 of $1.5 million. So that information doesn't get accounted for on the annual debt statement. It's not part of the 0.779 percentage, but once again, we're showing this to you for informational purposes. We have still amounts to be raised. In 2014, you can see that we're making $170,000 in the budget for the tax map / revaluation. There's $408,000 for the Hurricane Sandy payment that we have to make. Now that $408,000 is fully funded from FEMA proceeds that we received in 2013. So there's a revenue line item of $408,000, and then we have the appropriation amount of $408,000. The contractual severance liability in 2013, the city passed an emergency to help fund $588,000. So we're making our first payment in 2014, and that payment will be $117,000. We'll be paying down that debt. Okay. Getting back to the percentages, in a worst case scenario, if the city needed to issue additional debt, they can issue $101 million in debt because it's based on 3.5% of the town's value. So the blue represents our net debt at this point in time. The red indicates our available for use. So they're nowhere near the 3.5% limit, which is very good fiscally. Trend, as you can see here, we were talking about a borrowing capacity. So if we go back to the previous slide, our borrowing capacity is made up of the entire pie, the blue being our net debt. We go over here and we can see the trend down. Well, why is our borrowing capacity going down? That really doesn't make any sense. Well, it makes sense because it's based on the valuation of the community, and as we've been showing you previously, our value has continued to decrease over history. But you're not in a situation where that's actually causing you fiscal distress relative to debt. Certainly it has other implications in the budget that we've gone over, but from a debt perspective, from 2009 all the way to 2013, there has not been a dramatic increase. So I think you can see on the slide here, roughly $33 million the high point in 2010, and we're at the 28.9. So we would love to see the trend, continue down, but as infrastructure improvements and other major equipment items have to be included in the city's budget process, you want to make sure that you're passing a sound fiscal practice in terms of your debt service as well. Thankfully, I know that you're wondering, when was he ever going to finish? And at this point, we are finished.
Okay, at this point, I know each of the council members has had a chance to meet with the auditor and with the manager, so why don't I open it up for questions from the public about the budget, then we can go back and discuss this among council after the public has a chance to ask the auditor or the manager any questions about the budget that's been presented. So if you're interested in asking a question, if you would, please step forward, use the microphone, state your name and address for the record, and please bear in mind that there is a 5-minute limit on comments. Yes, Mike.
Michael, great presentation. A couple questions. On the comparison of budget appropriations, salaries, and pension, you have comparison between 2013 original budget and 2014 proposed. Do we have 2013 actual?
Well, what would happen, the 2013, these are budgeted numbers, they're not actual numbers. So what happens is there were transfers that were made. We can certainly put that information together for you, but we don't have it immediately available. We can put that together. Though the one thing that it becomes very difficult you want to be able to compare the original versus the proposed, so we want to keep the numbers the same, but we can certainly provide that information for you. What will happen is on the city's website, there is a copy of the draft budget, so therefore we actually, that's why I added the sheet locations, 17A, 25. There is actually a column that shows the original budget for 2013. There will be an emergency column, and then there will be an amount for after transfers. So those would be the totals that you would look for comparison purposes. And then there's also the actual amounts paid or charged included on those line items. So if you were to refer to 17A and 25, you would actually see those numbers.
Okay. Second question, municipal court. 2013 budget revenue, $155,000, actual $134,000. Budget 2014 budget $134,000. Expenses for the municipal court is budgeted at $170,000. So we're actually, the municipal court is operating in a deficit. Is this normal for most municipalities?
Sure.
It depends. It depends on the activity in the community in terms of the ticketing process that occurs. It depends on the person who's sitting in the judge's seat, whether or not they allow for time payment. There are certain factors that impact that could be out of the city's control, but your goal certainly would be to ensure that the costs that are in a certain department are being funded by the revenue that they generate. But we're in government here in New Jersey, so therefore it's a service that has to be provided. It could very well be that we could have 3 employees in the municipal court and they all could be making $75,000 because of their experience. These are all sample numbers, they're not the actual numbers, and therefore you may never be able to actually have revenues that sustain that department just because of the makeup of contractual obligations, the insurance person. You may have somebody who has full family coverage. There are a lot of factors that would go into it. So you're not even including in those numbers the insurance line item, the pension amount. They're all in different line items. So if you went back and calculated the true cost, the personnel cost, the salary and wage line is X, but the true cost is up here. So if I was going to answer the question and say to you that the municipal court true costs are far greater than the revenue they bring in because of other line items that are in the budget. So the insurance line item, the pension number, they're not specifically listed in a municipal court line item, if that makes sense.
Okay. Is this an item that some municipalities have looked at doing through shared services?
Absolutely. Yes.
Okay,
Yeah.
thank you.
Many of the clients that we also serve have multiple court arrangements like that. They
Okay.
do.
Okay, any other questions on the budget? Yes, Jerry?
Jerry Seach, 1201 Ocean Avenue. You did a wonderful presentation of a very boring subject, thank you.
We try.
I might have missed your explanation when you went through it, but under the golf course, it's a very minor item, but you had unemployment insurance of $8,700, and then it seemed to jump up, unless you explained it and I missed it, up to $25,000. What would cause that kind of gap?
I think what happens is the golf course manager submits a budget to the city finance office, and I don't know if the CFO can give us a direction on exactly why those numbers change, but it's a combined number relative to, I think, let me find it on the screen here.
Do you want me to answer, Peg? Okay. There was a couple people, I believe, that were let go, and they're on with the unemployment now. So when people leave and they're eligible for unemployment, the unemployment expense would go up.
Oh, so this is the add-on tax beyond the contribution that the city makes.
Yeah, it's done through a calculation with the finance department. It's how we allocate it in the budget. Mike can explain, but different municipalities do it different ways, and we do it under a formula.
I see.
But that has to cover any of the unemployment expense that we believe that we may incur.
It's a big jump, okay,
Yeah,
thanks.
it is. But
Well,
that's
once
what
again,
happens.
it's the budgeted number. It's not the actual, but yes.
Yes, ma'am. You had a question?
Catherine Nguyen, 230 3rd Street South. On a couple of pages here, analysis of general operations, budget appropriations, and salaries and pension. There's a major category for public safety, I'm sorry. Can that be broken down, cost for fire and cost for police?
Sure.
I'd like to see more definition. Okay, thank you.
Thank you. Yes, Tom?
Just one add-on to that, the actual draft budget that is online does go through and show every line item relative to that. So it'll show you what police salaries and wages are. It'll show you what's budgeted for fire salaries and wages. Right. We can definitely do that. Well, what we'll do is we can actually add a slide to show the breakdown of what makes up the public safety.
Mike, just one point of note. When looking at the police salary and wages, it will appear to be higher than fire salary and wages. However, our dispatch personnel is included for budget purposes, and it's associated totally to the police department. And I think that that's a skewed situation, because actually the dispatch is dispatch for both police and fire, but it's allocated to the police department, so it's a disproportionate, budget item to the police department. So it doesn't really give you a fair analysis of the comparison. I wanted to make that note.
We can always try and pull that number out and show that separately.
Right, a third piece of the pie. So police, fire, and...
Yes. Thank you. Tom?
Tom Millhouse, 2 Atlantis Cove. Obviously, the golf course is going to be a contentious issue. Looking at the historical, almost a bell curve that you've got there, is the downside I guess what I'm trying to determine is that typical of golf courses in the area? My suspicions are that it's driven by the economy, since 2007 is the peak, and Hurricane Sandy. So it might be worthwhile looking at how that compares to other golf courses in the area and see if we're in a rebound state or whether we're going to continue to decline.
Thank you, Tom. And I believe your analysis is accurate. It goes from 2007, when we entered into the longest recession in our nation's history, to the largest drop in Superstorm Sandy, where the golf course really did not operate effectively or at all, probably for 4 months. in a very deteriorated state for 2 additional months. So what you're looking at is a revenue that is generated on a very short period of time. So the problem with the budget is you have to budget it the way it is, but the deficit is really $187,000, not what we're budgeting, but unfortunately, that's the way New Jersey budgeting works. You can't anticipate more than you took in the previous year.
I'd like to comment on that. While that is true that the deficit, the operating deficit was that amount, we must not forget the fact that we borrowed X amount of dollars to purchase the golf course, which the city operates. And we have to make the debt service. Now that debt service, okay, if it were a self-liquidating utility, would come out of the fund balance. Unfortunately, we don't have the fund balance. And this year, it's going to create a cost to the taxpayers, each and every single taxpayers, of $87. And of course, that is why we put together this golf course steering committee to see whether or not it's in the best interest of the taxpayers for us to continue down the road that we have, the way we've operated since we purchased the golf course in 2002, when it was stated to the public that it will be a self-liquidating utility and will not cost the taxpayers any money. And in fact, this year, it's going to cost each and every taxpayer $87. Now,
That's the average.
that's the
Yeah.
average, based on a 366,000 assessment. It'll probably cost Councilman Simpson and myself considerably more, because our assessments are
Well,
considerably
we'll
higher.
go play for it.
Pardon me?
We'll go play for it. I'll give you a stroke.
Andy, you may want to get a group of people together and buy the golf course, and that'll take the debt off of the city.
Well,
So I know, well, I'm not done.
Actually,
I'm not done,
that's
Mayor.
an excellent point, though. And, once again, as we seem to be rushing to the RFP process based on a year that we had Superstorm Sandy, and one of the things that has to be included in any RFP, and one of the things that has to be very, very clear, is that anyone who is coming in to take over the golf course, any investor, has to pay for the debt service up front. And if that takes that issue away, they're going to put $2.5 million in escrow to make sure that the taxpayers don't pay a dime in terms of debt service, because that apparently is the goal.
Then
Then
that
I
is not the
think
goal,
it's something we
Mayor.
ought to explore. But we need
That's not the goal.
$2.5 million in escrow, because if you don't do that, then the taxpayers are paying the debt service while an investor makes money on the golf course.
Well, that-
Makes no sense.
Mayor, I disagree with you. Fact of the matter is that we have 4 additional years of bond payments.
Right?
The golf course is in dire need of capital improvement, and we have a master plan coming up shortly that will show that bare bones minimum, in order to make this golf course competitive, that means drawing people onto this island to play golf, because the people that live on this island cannot generate enough revenue in fees to make that golf course be self-sustaining. So you need a minimum, and I don't want to go into the numbers, but we'll have that analysis soon by Stephen Kay, the individual that we've hired to put together a master plan. So if you need a minimum of $2 million to make this golf course playable, or at least desirable for play, to bring people in from over the bridge, we have 2 options. Either the city can go out and borrow another $2 million, which I personally am against, which would then put us in future debt. Or you can put an RFP together, and we don't know what that RFP is going to say. We have a meeting on Tuesday. Councilman Simpson, myself, the members of the steering committee, which also include our city manager and our city solicitor. Any private company coming in is not going to take our debt service over and pay for it. No, we're still going to be on the hook for the next 4 years for our debt service. However, part of that process, the RFP process, will state that these capital improvements that must be done will be part of that RFP, and have to be done in the short term, meaning in the first couple years. And it may very well be that the first year or two, they may not pay any rent. So the city is going to lose money for the next 4 years. The question is, if we bring in a private person and that individual is going to put the investment back into the golf course, what it will do, the last 2 years of our debt service, as they start paying rent, it will reduce the amount of money that we lose. The big upside, if we go out for a 24-year arrangement, which state statute says that we can, it'll ensure the taxpayers that you're not going to have to subsidize the golf course 20 years beyond when we pay off our debt. And that's what we're discussing. The goal here isn't whether or not the golf course is an asset to the community. I tell you that it is an asset. It's an asset to own that real estate. It's an asset that we can draw people here. If we have a professional operator, okay, that is operating a golf course, the city of Brigantine or any government body should not be in private business. I've stated that all along. I believe that, and I think the numbers will bear itself out. When we put together an RFP that will be brought back in front of all of council to make a decision as to whether or not we want to go in that direction, I urge the taxpayers to come here and voice your opinion, because the mayor's opinion and my opinion are totally different. I'm explaining to you the way I see this golf course utility, the way it is going to continue to lose money, and if we don't bring in a private operator, a quality, competent, professional operator who's going to make capital investment, we will have to go out and borrow an additional $2 million. And we don't know whether the city operating it through a management company can earn enough money to make sure that you don't end up in the same situation that we are in today. And so they are my comments. I'm sure the mayor will disagree, and he's entitled to disagree and have his opinion, but the facts are the facts. Look at the budget. Look at the amount of money that we are all going to pay this year to subsidize a golf course that was promised to the taxpayers you would never have to make a dime's payment.
Well,
Well,
I don't want to go, I'm sorry.
I didn't know we were getting into a discussion here. I just wanted to ask Mike, so I'm clear. Mike, we still have $204,000 in the surplus that we can't use?
You have $2,000 in surplus that you can utilize. The
How about-
the other 200 is dedicated to the fact that you had a deficit and an emergency authorization. They are not permitted to be used. So on paper, it's 200,000,
Right.
but in reality, it's $2,000.
Okay, but once we hit $901,000 or whatever, we go past that, we can use the 200,000?
No.
No, you can't use it at all this year.
No, you'll need to recoup more than that.
Well, what's the number?
Be 200,000 more than that. So if you had
Okay, so if we hit
$900,000
$1.1
budgeted.
million, we can use the 200,000.
Right. Well, what will happen is if the golf course ends
Plus
up,
the 200,000 that we went over the budget, so that's 400,000.
if the golf course ends up, and we have it on the screen here, where they have a $900,000 budgeted for golf course charges.
Right.
If by chance we end up with $1.9 million in revenue from the golf course, that extra $1 million, whatever that does to help balance the budget, would in fact reduce the $765,000 from the current fund. So if we ended 2014's year in such a stellar condition as having 1.9 in golf course charges, that $1 million extra in revenue would go a long way to pretty much evaporating the $700,000 charge to the current fund. Unfortunately, you as a city need to budget that $765,000. So whatever the deficit ends up being at the end of the year, if it's not $765,000, if it's zero, we turn zero over to the golf course. If the deficit ends up being $500,000, you will have raised $765,000, but only turn over $500,000. So in essence, at the end of 2014, your best case scenario is a zero fund balance because that means the taxpayers didn't have to turn over 765. It's a very complicated situation, but the way the New Jersey budgeting practices are, the city needs to budget that 765 to balance the budget for 2014. Yes, the deficit was 187 last year, but the deficit projection based on just balancing the budget is 765,000. So in Mr. Simpson's scenario where we had maybe $1 million, maybe $1.1 million in golf course revenue, that certainly would go to helping the situation and reduce the 765 that we need to turn over.
That's all I need to know.
And
I just need to know when we get to a point where you can use the $200,000 in surplus.
Yeah, the break-even point is actually very difficult to come up with because it's a fluid situation. It depends on what the other expenses are, how the other, what happens with salaries and wages, what happens if there's any emergencies. So there are other factors that go into the appropriation side of the budget. So,
I
but
can't
we'll-
see you because Scott said it.
my concern is, and we will have a lot of debate about this as we go forward, we look at the RFP process, is we should not take a year that was an anomaly and plan for a 24-year agreement with someone. You know, we seem to be ignoring all the other years where revenue was what it was, but also the golf course is open right now. It was last week. It was packed. Whether we need $2 million immediately to continue the level of play, I don't know. That's something we can discuss going forward.
Mike, I have a question about the golf course utility fund balance of $2,000. That's alarming. What would it take, and I listened to what Andy Simpson said here about using that money, but what would it take, what would have to happen for us to get back to a healthy fund balance?
Well, certainly I couldn't give you an exact number today to do that. What you would need is sustained growth in the golf course charges. As you can see through the bell curve that we were talking about, if we ended up back where we had the 1.9 million or $2 million in golf course charges, that would be the avenue that would start putting you back into a situation where you wouldn't be having deficits. So certainly from a $900,000 revenue, you need to start building that back up to $1.4 million, $1.5 million, getting it back up to that $1.9 million would be where you want to be, because you'll need to have those revenues also to sustain any capital improvements that are done to the golf course. So right now, any improvement to the golf course to make it in better shape would have to go through a bonding process, and that would be more of a burden to the appropriation side of the budget. So more burden on the appropriation side means you need a greater amount of revenue. So focusing back to when they actually had a healthy surplus, you can see there the trend is really from the $1.7 million to the $1.9 million range is when they had a significant, decent surplus. And as the revenues trended down, on the screen here, you can see from the $1.3 million down to $1.2 million, down to $1.1 million, down to 900,000. Steadily, it was decreasing. You can see that the yellow portion, which is the amount of fund balance used to balance the budget, increased. So as the red numbers decreased, certainly we needed to balance the budget. So to get it back to a healthy trend, the $1.9 million range is where you need to be on a sustained basis, probably. Can't speak specifically to it, but.
But just so I can get the numbers in my own head, if we were to give ourselves the same deal, if we took the debt service out of the golf course budget, carried it in as a debt service line, and then borrowed $2 million to make the improvements to the golf course, we would be back in the same situation we're in, if we have the revenue going forward.
I'm not sure what you were referring to as moving the debt service.
If we're talking about giving an investor that deal where they get to have a no payment for the debt service, and they are investing $2 million, if we amortize $2 million, as part of the city's debt, it would be a lot less than what we're looking at now in terms of the 400.
Well, I haven't been consulted on any of the potential.
But just your sense of that would be 2 million financed over 20
I wouldn't want to speculate on anything without having numbers in front of me, frankly.
But then
So-
we assume all of the risk, too.
We also own the property after
Well,
5
we
more
we
years
own
and
the
debt
property.
service goes
If-
away.
We own the property no matter what. That's not going to go away.
Yeah, can I, before we go any further with this, and I don't want to forestall further discussion because it is an important subject, and it's going to be an important subject in the budget discussions and otherwise, but I understand the Golf Steering Committee is scheduled to meet this coming week.
Tuesday.
Yeah, I would like for the Golf Steering Committee to report back to the full council at our meeting on the 19th so that we can have a full discussion about some of the topics we're touching on here about the golf course. And let me say, by way of framing that discussion, let's frame it honestly. We're not talking about a one-year revenue trend. The charts are there. The trends are multi-year trends. We can discuss and argue and speculate about the causes, how many are specific to Brigantine, to what extent did Sandy impact it, how much is the economy, how much is the golf industry. Those are all worthwhile topics of discussion, but let's be honest. Let's not talk about, well, what if we didn't have or we ignored our debt service? We can't. That's our debt. We have to pay that. You knew, the city council knew in 2008, they got a report which said that there needed to be substantial capital improvements made to the golf course to keep it viable. And again, whatever may have happened with the economy since that point, the fact is, council didn't do a thing with that report. They didn't make a move. They didn't say a word. The trends have continued. We are where we are. The money that's in this year's budget that's coming out of people's pockets to finance the golf course is real money. We can look at this in a lot of different ways. Well, what if this? What if that? Here's the reality. The choice is really simple. Despite some of the ridiculous rumors that were floated at the start of the whole discussion of the golf course matter many, many months back, everyone up here has always said golf course must stay in the city's possession. The golf course must be a golf course. The golf course must be the best golf course can be. And now, the biggest consideration, I think from the taxpayers' consideration, or from their perspective, is it can't be a drain on us financially. So what are your two choices? Either the city runs it, or you put it out for an RFP. If you put out for an RFP, I'm not going to impose, and there's never been any discussion of imposing, and for the reasons Councilman Palella gave, I'm not going to impose any obligation on a prospective interested party that they have to pick up our debt service. If you put it out for an RFP, we're asking people in the golf industry who know what they're doing, who know how to run golf courses, to tell us what can they do for us. We'll evaluate at that point, assuming we got to an RFP, and I'm 100% in favor of it, we'll evaluate at that point whether the proposals they're making are balanced against the other alternative. And there's only one other alternative. There's not multiple alternatives out there. It's either the city runs it or a third party runs it, because it's going to be a golf course, and we want to keep the cost to the city cost neutral at worst. So all we're going to have to look at is what are we being offered? What's the proposal? We know that anybody coming in on an RFP is going to have to commit to investing whatever the number ends up being based on our master plans being developed. And we're going to look for the best deal for the city beyond that in terms of what the golf course will throw off. So when we get to that point, I think we can look at it and someone, I'm sure, will be saying, well, maybe this is a short-term trend that we're losing money. Maybe the golf course will turn around. Maybe the industry will turn around. Maybe if we did this or that, you know, we're going to throw off substantial positive cash to the city. We could talk about that. I'll say now, anybody who wants to make that argument, you better show me something that backs that up, because that really looks like raw speculation. Yeah, things might get better. It might get back to where it was, but tell me why I should think that. Tell me why I should tell the taxpayers that you guys have to foot the bill because we're going to throw the dice and we think better days are coming. Maybe they are, but you better have something more concrete than, well, it was good before.
Well, Rick, I appreciate your, I guess the intention was to have that debate when we do the RFP, and I appreciate that comment. But in the context of this budget, I think we need to be honest about what the impact of Sandy was on the revenue in the golf course and how that moves into the budget for next year. $900,000 wasn't what was anticipated in revenue for the budget for the golf course last year. And we know that it's a number that was severely impacted by the superstorm. we need to be honest about it. It is trending downward, but I don't think it would have been at $900,000 last year.
But aren't we then, Phil, just talking about the magnitude of the number, the real issue, and people,
Excuse me, folks.
I mean,
Thank you.
no, it's not a regular meeting. The real story is that the golf industry generally has been going down. Is it strictly related to the economy? You better talk to people who know the golf industry before you make that assumption, because that assumption,
Excuse me.
I don't want to waste my time.
Gino, hold on 1 second, all right?
Okay,
If we let everybody do this, we'll have chaos, so just
Well-
give me a second, all right?
sure.
All right. If Councilman DeLucre is almost finished, we'll call up the next person.
well, we don't have to call him if he's here.
I know.
The
We didn't call him.
point is, Phil, not everything happening at the golf course over the past 5 or 6 years can be attributed to sand.
No, absolutely.
I mean, we can't focus on that, and we can't focus on 1 year because we're not. It was the worst of the years, but it wasn't the only year when things were declining. I mean, we have to make reasoned and supportable assumptions and decisions going forward as to what is likely to happen and what we can make happen. And to the extent we can't make things happen because they're unknown or uncontrollable, we better factor that in too.
Well, I guess, just to sum up my remarks, we want to hold an investor to the same standard that we're holding ourselves to. And that is, that it should not be, you know, the impact on the taxpayers. That seems to be the major concern. So any investor coming in has to lessen that impact significantly on the taxpayers. I'm sorry, Gino.
Okay, first of all.
If you
I
would state your
apologize.
name and address for the record, if you would.
My name is Gino Popola. I live at 1112 West Beach Avenue, and I apologize for interrupting. However, all of us came here on our nickel to ask you questions. I don't ever come to these meetings because this is what the city council always deteriorates to. You all get up there and you debate against each other your own opinions. I would appreciate if you would all refrain from debating the issues and allow us to provide you with questions and food for thought. I have 3 issues that I want to make. That was the first one. The second one, as it goes to the golf course, I don't have enough information to say whether we should be running the golf course or whether we should get a third party to manage the golf course. But what I can tell you, as an avid golfer that plays all the courses here, for people to continuously say how bad Brigantine's golf course is, I suggested you go to some of the other golf courses and see what a bad golf course really looks like. And if you think that spending $2 million and wasting more money to have these golf professionals come in to tell you all the good things that you should do to the golf course and spend that kind of money when you already have an insurmountable debt service on the budget, you are wrong. Spending that money will not improve the number of people and the revenue that the golf course comes in. As the earlier gentleman spoke, and if any of you follow golf, the golf industry has been depressed. Golf players don't go out and play because it's too expensive to play, and that is a significant reason why you've seen the drop-off. It's basically what they say, the economy stupid. And the economy is not getting any better the way we've come out of other recessions. So that's all I'm going to say about the golf course. The bigger picture I wanted to ask you about, that I'm not too familiar with municipal governance, I noticed that the total debt service between the municipal debt service and the school debt service is like 16% of your budget. If I'm reading the numbers right, it's like $5 million. Is that just the debt service on loans that we have outstanding that we're paying off over a period of time? Is that the actual money we pay in servicing that debt? And if the answer to that is yes, I'd like to know what the total amount of outstanding debt we have, excluding the debt service on that debt.
On the screen, you can see that budgeted for debt service for the municipal side for 2014 is 3.7 $1.94 million. So that, it represents the principal, that's right down here.
Yeah, I see it.
Okay. That represents the municipal share of bonds, loans, and bond anticipation notes that the city has outstanding. That is principal and interest payments that will be made in 2014. The debt service for the school, the 1.2 million, right here, right below it, is what we put in our budget because as a type 1 school district, we make the payments relative to the school debt service, and it goes through our budget. The reason theirs decreased is because in 2013, one of the EDA projects that they had was paid off, so their debt service trended down. So we're paying $3.794 million in 2014.
Is that just the service of the
That's the principal and interest payment. So as if you're making your mortgage payment, that's the principal and interest payment.
So how much of that is?
Well, now I'm trying to get to what we still have, what we have outstanding. On this screen here, there's a difference between what is authorized and what is actually issued. But we have an amount there at the very top where it says issued bonds, notes, and loans, roughly 45 million. So that's what the city at 12/31/2013 has on its financial records as the amounts outstanding. So that's our mortgage payment, if you will. So the 45 million is what we owe, and we have budgeted almost 3.8 million for principal and interest in 2014.
So that's the total gross debt.
That's the issued amount, 45 million.
So
Gross debt is actually higher.
Cut a check to pay the debt off, you cut them a check for 46 million.
Roughly, that's correct.
So that's like, budget is 31 million, and beyond the budget, we have an outstanding debt of 46 million.
Right, but remember when we're looking at the pie chart there, and what the purpose of debt is for. Debt issue for capital improvement items, whether it's infrastructure, whether it's equipment. We go through that process because you may buy a piece of equipment that has a useful life of 10 years. Operationally, you'd love to be in a position where you could buy that and bam, hit the taxpayer immediately. But you could be a taxpayer who has moved out 2 years later and you're not getting the benefit, but you paid for something that the rest of the citizens left behind are paying for. So the point is, when you have capital items, you go through a process and you make sure that you have a system in place that spreads the cost of these capital improvements over a period of time. So when you look at this and say, yes, 46 million, when you just talk in that terms, that's very significant. But when you're looking at the percentage relative to the value of the community, remember we were at 0.779 roughly, which is well under the 3.5% permitted. So looking at that screen, you see that large red piece of the pie. That means we can still issue debt and authorize debt for another $101 million without it being an issue. Now, nobody wants to go out and put everything on a credit card. I understand that, but there is a rationale as to why some things are spread over time, because their useful life of the piece of equipment or the land improvement or the infrastructure or the road that's being put down is going to last more than 1 year.
What is the, like, I know they all probably have different amortization periods, but
Yeah,
what would be the average?
Well, it really depends, because you could have a piece of equipment that's a 15-year piece of equipment. You could have something like a police SUV as a 5-year useful life. You could have the purchase of open space land, unlimited. It's technically a 40-year useful life. Infrastructure improvements in the water sewer utility could be 40 years. But there is a statutory bond law in the state of New Jersey. The statute spells out specifically what the useful life is. So if there's a bond ordinance that the city is doing, It can be made up of 5-year useful life, 7-year useful life equipment, 15, maybe 20, 25. It's blended all together, and you may have a net useful life of 11.7 years or whatever that is, and you factor that into the amortization payment back. You're not going to be paying for a piece of equipment beyond the useful life in theory.
I understand as far as equipment goes. Are those rates fixed or are they variable?
The rates right now that all the debt that the borough or the city utilizes, they're fixed, because for long-term financing, we went out, we priced it in the market based on the city's bond rating and things like that. You have set rates. There are certain things known as bond anticipation notes. They roll over each year. They do fluctuate based on circumstances relative to the market factors that are out there with interest.
Is that a large portion or a low portion of the overall?
I think if you look at that specifically, the notes are on the lower end. Your actual permanent financing is the greater portion at this point in time.
So if rates go up, which eventually...
You're
go
locked
up,
in.
We're pretty much hedged
Right.
against that.
And there have been times where, just as a citizen has done with their mortgage, they refinanced. The city, over the period of time, has gone through the process, and when it was advantageous, they went through a refinancing process as well to keep the debt service as low as possible.
Then one last question. How does our debt service compare to like other municipalities?
Well, once again, the factor that you would look at is comparing it to the 3.5%. You're at 7.79. So relatively speaking, that's great. But each community has different factors in it. So if you looked at an Atlantic City, or you looked at a Margate or a Longport, you really aren't going to be comparing apples to apples. You have situations here where you have unique infrastructure, you have different roads, you have different equipment needs. So it's very difficult to say bam, bam, bam compared to the neighbors. The key factor is, how do you relate to the 3.5%? You are significantly better than the 3.5%. You're not anywhere near the quote-unquote credit limit.
Okay, thank you.
Thank you.
Thank you, Gio. Any other comments on the budget? Mrs. Phillips?
Ann H. Phillips, 308 27th Street. I'm assuming that according to the procedure you just set, questions should now be directed to Mr. Cesaro. Will there be time later to direct questions to council?
You could do both.
Okay, well, all right. Mr. Cesaro, on the sheet, it says revaluation, cannot compare rates due to valuation change. However, to get the 42% increase, you work with a 22-cent increase from 0.522 last year to 0.742 this year.
Yeah.
So I don't understand why this is correct. Why you are comparing the two.
Yeah, the sensational headline that was out there says, yes, rates increase or may increase 42%. Factually, that is accurate. But the full picture is the value of the community drops significantly. So therefore, it's the tax levy, the amount that you're actually spreading over the value of the community. That is what needs to be focused on. The rate is just a mathematical component of the calculation. As I gave you my example with the $100 million scenario and the 25, it was a 25 cent to a 50 cent, so rates doubled. It's not the rate that should be focused on. The headline is accurate.
But that's how you determine what you're going to be paying.
No.
Yes,
Well,
you divide.
I appreciate that, but what the one thing that you have to do is take the local rate times your new assessment.
That's right, that's what I did. And that's a 42% increase in my property tax based on the municipal purpose tax itself, not including the school
So
and
you
the
have
county.
I'd be glad to review your prior value versus the new value and make sure that the calculation is correct.
It is.
Okay?
Okay,
Mrs.
well,
Phillips, out of curiosity, did your value stay the same, go down, or go up?
it went up $8,000. And I didn't appeal that.
Okay.
So I worked with that, and I worked with both, and that's the 42%.
You'd be in a situation where you're probably correct then.
Yes. So I just want to make sure, too. I know the debt service for the school is carried in the municipal budget. However, there is an item on the tax bill that says local municipal budget, and that's the school debt service. So actually, when you look at the municipal purpose tax, it's not including that school debt service, even though it's in the municipal budget. It gets, you know, kind of muddy and complicated, but if you look at the property tax bill, that's what's that little item, which is a small amount, is
Right.
the school debt
On the screen
service.
here, the amounts to be raised by taxation, there is a local and school. We break that out for informational purposes, but you're correct,
Yes.
they are blended
Okay.
on the tax bill.
Another question on the police and fireman pension system. We have at least, I believe, 5 or 6 firemen retiring. I don't know about the police department, which means that they now get into the state pension system in terms of where they will be drawing their pension, not from this municipality. However, the amount budgeted in here and in the draft budget is almost $100,000 more when we have fewer people and fewer higher paid people. My question is, am I understanding the pension system correctly, and that logically it would appear that amount would not go up because you're dealing, the people who are the higher paid ones and been here the longest are going to be gone. They will be now drawing down from the state money that the state has. So why is ours going up?
The pension bill, it's a complex formula. I'm not an actuary, but what happens is at the state level, there is the pension plan. They maintain these pension plans. They have an actuarial calculation to determine everybody that are contributing based on age, sex, everything involved, and they go through and they tell the city of Brigantine, as they tell every other city or entity involved, this is the amount of money that you owe each year. So what happens is the city is making a contribution to the state pension plan based on these formulas. The state pension plan is made up of contributions from employees, contributions from the entities such as the city, and from hopefully investment earnings if they invested wisely. So that calculation is done, and each year the city receives a bill which is due by April 1st. So there is always going to be a timing difference. We may have 6 individuals, we may have 10 individuals retiring. It'll eventually work itself into the calculation. The city itself, on those pension amounts, those are not payments to city retirees. That is the payment that we're making to the state to fund the payments to these individuals.
So in other words, you're saying this might show up next year in terms of there being a reduction?
Well, you
From the
have to go
state.
back and consider there's a lot of factors. If, for instance, the investment earnings from the plan were not significant, if the state did not make their contribution to the pension plan, there's a whole host of factors that are involved in their determining what amount we owe. We have no room to argue the bill, to question the bill. We get a bill, that's what's owed. Hopefully,
part of it-
theoretically, the lower the employees that you have, the lower valued in terms of salary, eventually there will be a reduction in those line items.
But one of the
Okay.
big factors that goes into that is the fact that people retire so young, and they're going to be drawing on the pension system for so long. And we have a good amount of people who are retired at a fairly young age. And that's, for the actuarialists, that's one of the biggest things that, that affects the draw on the funds.
Yeah, a lot of factors, which makes it hard for the common taxpayer to understand what's going on here. But we would hope
Correct.
that in the future, maybe, there might be a reduction. Okay, so you want questions directed to you, and you're going to have a discussion following that. Is that correct?
Yes.
Okay, well, I guess a basic question to a taxpayer, certainly to myself. You used, Mr. Cesar, the word shocking, and I certainly would share that. A 42% increase, and that must be the greatest increase in Brigantine's history. It might even exceed what happened in Atlantic City last year. Is it your determination and commitment that this will not stand? And each one of you individually, I think, should make a comment or something to is this, by the way, is this being televised?
Yes, it is.
Good.
But once again, going back to the 42%, I'm not,
Yes, it is. Look
For-
at your
for
own
you.
tax. No, everybody.
No,
It's
Mayor,
not,
Not in real
I-
the
dollars.
Well,
tax
you're-
rate is
but you're-
applicable to everybody.
I understand that, but most people, and the value of their property went down. So the rate, we said this was going to happen with the reeval. The value goes down, the rate goes up. So it may not, the rate has changed, but it's different for everyone.
That's correct. The amount you're paying is going to be different, but the rate is the same for everybody. If your assessment went up or it didn't go up very much or stayed the same, yes, you're going to be paying more. You're going to use that rate against the assessment, obviously.
But it's
But-
not, but people's tax bills are not gonna go up 42%. That's the
Well, there are a
assumption
number of
that people
factors that
make.
go into that. Whether you've
Right.
appealed your taxes over time, your value then is right now at very close to where the assessment came in, maybe off by $8,000. But you had the advantage, if someone did this, you had a lower value on a lower rate during the time that you did the appeal. Now things have equaled out. Your rate now is based on the present value. And we said this would happen
That's
as we went through
correct.
the tax reeval process.
But the rate increase is still 42%. That's it. 22% divided by 5.522 is
Right,
42.
well, it may be, but
So-
it's not a. I
Yeah,
think
but
what-
don't
what
muddy the
Mike is saying, though, is
situation.
the comparison is not, in some ways, apples to apples for everyone. Maybe
The
for
rate
you.
is the same for everyone,
But their
whether you
assess-
have,
But not everyone's assessment stayed the same.
I know that. I'm
Right.
not arguing that. I'm simply saying that based on the rates, it was a 42% increase, and that's what you do every year. Last year was 7%, the year before was 10. So it is, my question to you is, are you making a commitment to the taxpayers to go through all this and reduce that? Reduce the 22 cents?
Absolutely. But I have to remind you, Mrs. Phillips, you were in favor of a tax increase last year.
And I should remind you, Mayor Gunther,
Just throwing it
that
out there.
the council last year approved a rate increase of 7%, and that was their first year, the majority party on council. The year before, the rate increase was 10% when your party, including my party, was 10%.
So
And no,
you're-
the Democrats didn't have any say in that. So if you want to go through all those rate increases, I can give you all the figures back to 1990.
I'm sure you can.
So
Well,
I'm not here to do that.
We'll give
The
Mrs.
point
Phillips a
is,
couple more minutes because we interrupted her. Go ahead, Ms. Phillips.
thank you for that, and I'll be brief.
Thank you.
But my couple questions. Group health has gone up $95,000, and I'm wondering when we, and you know, all of this is related to the contracts too. Now, I know there are some expired that still haven't been renegotiated, and I think the difference is because there's reluctance on the part of the unions to make some necessary changes. So even so, right now, we're almost at 2 million for group health, and that should be reflected, I think, or at least looked at when you do the negotiations for the contracts. The director's position is listed as $110,000 when his salary in the salary ordinance, the max is 105. I didn't understand the difference there. Perhaps you can explain that. And there are other things here we have listed, and of course the golf course, everybody's concerned about that. That's at this point 2.5 cents on the tax, your tax rate. So that's a major problem. And I noticed a $440,000 appropriation for reserve for emergency vehicles and appurtenances. What's that?
I'm sorry, what was the last question?
Oh, I'm sorry. The reserve for emergency vehicles and appurtenances, $440,000.
Would you like me to answer? I can answer that.
Sure.
Right.
Yeah.
That, one of the things, if you recall, in 2013, some of the funding that we received for insurance did in fact come in. So we received proceeds in 2013 for just over $400,000. The city in 2013 did an ordinance for the purchase of fire equipment. I believe that was a discussion point that was being held. That ordinance did not include this amount of funding because they expected it to be coming in through insurance proceeds. So there is a revenue for that exact same amount, and that is the appropriation line item in the capital line to be utilized for the purchase or the I guess, refitting or new purchase, I guess it is, because we lost the fire truck. So that's what the fire equipment and appurtenances
You mean the
relate to
fire
that.
equipment, not the truck itself, but we have a bond ordinance for that, don't we?
Well, you do, but the bond ordinance was not grossed up to include the insurance proceeds, if that makes
Did we get
sense.
the insurance proceeds?
The insurance proceeds came in 2013. They're sitting in our bank account. They are being utilized as a revenue. The way New Jersey operates, the only way that we can spend money is either through the budget appropriation or through a spending ordinance such as the bond ordinance. The insurance proceeds were not included in the bond ordinance, so therefore in 2014, they're being inserted as a budget revenue and as a budget appropriation specific to the purpose for which we receive the insurance proceeds, that being the fire equipment and appurtenances.
So it's an offset?
It's an exact offset, that's
Oh,
correct.
I
There is
just-
no impact to the taxpayer relative to
Okay.
that. There's a revenue and exact
I didn't
offsetting
pick up the
appropriation.
second one. Okay, that's fine. Look, I don't want to take any more of your time. I have other questions, but I think we can do that at another meeting. But our concern is, yes, that this does not stand, that you do something to reduce the cost to the taxpayers because it's unacceptable and unsustainable. Thank you.
Thank you, Ms. Phillips.
Excuse me, Mayor. Mike, Mrs. Phillips brought up a very good question. I'd like a little clarification regarding the pension payment. She made a very good point. We have people in the city that have retired as of December 31st of 13. Is it not a fact that even once a person has retired, that there is a pension payment lag time to the city where their pensions are we continue to contribute to their pension? There's a lag time of approximately a year and a half. I'm not 100% sure, but it was a very good question. I think it's important to clarify that so that people understand why we have a smaller workforce, but yet making those contributions. Is that a contributing factor to why we don't see a reduction?
Well, once again, it goes back to the complex actuarial calculation that is performed at the state level. So if the state doesn't make their contribution, if investment earnings are down, if the expected life expectancy is greater as we go in here, because if people are retiring earlier, that means there's a greater burden on the pension plan. So when they do the calculation, it's very possible that we could lose 5, 10, 15, 20 employees per se and still be paying pretty much the same because of other factors outside the city's control. But certainly moving forward and the reduction of a workforce through the retirement process, you would tend to think and hope that the pension bill would reflect that. But once again, there are so many factors outside the city's control that we can't clasp down on that, and that's in fact why that's one of the exceptions to the 2% tax levy cap, because when those calculations are done, they need to make sure that the pension plan is funded by your contribution here through the city's budget, and therefore passing it on to the taxpayer.
But my specific question, I still don't think was answered, and that is, those individuals that have retired, does the city still have a obligation for contribution beyond their retirement date? My understanding is that there is a lag time there, and I don't know if it's because certain years the city did not have obligations to make a pension payment. So I'm just not 100% sure if my understanding is correct or not.
Once again, the bill itself that the city receives is based on an actuarial calculation. All factors are included in terms of how many employees you have, who these employees are, their gender, their life expectancy, and that's done throughout the entire plan itself. And then it's allocated to the city. So there's no way to say that these 5 or 6 employees, that once they've retired, we should see a reduction of the value of 5 or 6 of the employees. It's just not going to work the same way.
But we may not see the impact of all this for 20 or 30 years because people are still going to be in the retirement system, so we're still going to be billed for it for that long.
I think the way to look at it is you get a bill from the pension system every year. It's not per head, it's a
No.
general bill. And it's based on whatever they
A lot
come
of
up with
factors.
from the state for the employer's contribution. And the employee's contribution is part of that as well. Anyone else from the public? Yes?
Hi, Ally DeRigo, 4800 Harbor Beach Boulevard. Could I ask you to put the golf course budget back up? As you know, or you should know, last year in 2013, there were job eliminations, layoffs, demotions, and severe salary decreases at the golf course. So I'm wondering, how did salaries and wages go up by $20,000?
That's, Jennifer, you know why the salaries and wages went up?
I have to look at the detail with Nathan where he projected for the 2014 year. There's nothing scheduled on his end to hire anybody at this point, but as you know, and council knows, the employees are actually employees of Meadowbrook, and it gets paid out of our trust fund, but they're the ones that manage the employees.
And that seems to be a misconception too, and I've heard people use those terms interchangeably. The city does not operate the golf course. There is a third-party management company that operates the golf course right now.
But the revenues from the golf course those monies are used to pay employees,
Yes.
obviously.
Yes.
So, you know, I think it's a valid question to know why it went up. Okay, and so how will I get that answer?
We'll give my office a call during next week, and after I have a chance to go over with Nathan, you know, I can give you a call back.
Okay, thank you.
Thank you. Any other comments from the public? Mrs. Phillips? It's a little early, but yes, Mrs. Phillips.
There you go, Paul.
And this was just an article in the paper yesterday, and I thought I'd bring it to your attention, maybe you can pass a resolution. New Jersey must renew 2% cap in arbitration awards. It expires next month. And it was Suzanne Walters, I believe she was the mayor of Stone Harbor or something, and she's saying council should get on the ball, pass a resolution, get in touch with the state legislators so that this can be done and renewed. So I bring this request to you so that something can be done maybe today, in terms of a resolution.
I think Jennifer can address that. That's,
Yes, that was, we received notice from the New Jersey League of Municipalities to support this bill, and it was sent over to council to review, and it will be on for the agenda at our next council meeting.
Okay, thank you.
So we did look, but while you're up there, do you mind if I just kind of tap on some of the things that you were talking about?
Oh, no,
Last
sure.
time, do you mind?
No.
Okay. The 9,500 in the group health that you're talking about, those numbers are not firm yet. These were from year-end numbers that we were projecting from, and they need to be modified before the introduced budget. This is the first time we've had
Right.
the draft budget online, and there's still a lot of modifications that need to go on
Yeah,
for
I
some of these
understand.
numbers. But, you know, the unions, I do want to say, some of them we are having very good negotiations with, including, you know, the Teamsters and also the police, and we've started again with the lifeguards, the fire we just started with. So I'm not sure where that's going to lead for us, but they're aware, you know,
And
paying more into the health benefit.
That's an important point, because there seems to be a misconception out there that, and I've seen it written somewhere, and I don't remember where, that you've been engaged in negotiations for a long period of time with the fire department.
Not with the fire.
No,
And-
not the fire, no.
And the police department has been, how long has that contract expired?
That was at the end of 2012, but when we're talking about these big changes
Right.
with, it takes a little longer
Right,
to
so
get
I-
through these things.
There seems to be a misconception that there's a long and
Not with the BTA.
contentious battle going on. There isn't. I mean, it's the normal course, and it's not unusual to be a year without a contract, especially in today's times.
Okay, just one. Mr. Cesaro, I think Councilman Palella was asking a question, and I'm not sure he got the answer, and I would like to clarify this as well. It is my understanding that once you retire, the city or the municipality or whatever governmental entity no longer is making payments to the state pension fund for that person. Is that correct?
What happens is when a person retires, they no longer are contributing. However, the remaining entity in which they worked for is still being allocated a portion of their retirement payments
How long does that last?
for the life of the payments for those individuals, because they're attributed to the employer with where they worked. So if you retire at 46 and you live to 86 for 40 years then.
then the city, the municipality is responsible. What percentage
For a
of that?
portion of that. Now, remember that, once again, it's into a large pot. You have thousands of state employees, you have thousands of county employees and municipal employees that are all part of this process. And payments to a City of Brigantine retiree could be made up of funding from the state budget, investment earnings that occurred. It's not directly 100% attributable to the city.
I understand that.
Right, but-
What percentage is it that we have to keep
I would have
paying?
absolutely no idea how that calculation is worked out, because I'm not an actuary.
Mike, unless I'm misunderstanding this, it's an aggregate. We're paying for the guy who retired from Jersey City as much as we're paying for the guy who retired from Brigantine.
It's allocated
It
on
doesn't
all
have anything
factors.
to do with, it's all one pool. So you don't have, Chief Stone retired, it's not that portion.
We're not
of
paying
Chief-
100%
we're not
for
paying
our
him. He's part
retirees.
of the entire pool.
2% or
Yeah, well, what
3%.
gets in, the investments and everything else?
Yeah, but
that-
it's not specific to that employee.
Well,
It's-
no, it's not specific to the employee, but we're factored in the number of people we have in the system.
But it's a total system.
Yeah, exactly.
Right.
Yeah, I mean, if you wanted to try and tease that out, I don't know if you could do that statistically. I guess you could. Figure the number of retirees and figure what portion of that, for all the police and fire in the entire state of New Jersey that are retired,
Yeah,
they all have an impact on that pension,
Okay,
not
just
just
so
ours.
I understand, when somebody retires, for instance, from Brigantine, the taxpayers will continue to pay into that pension fund until he dies?
No. You will pay your
depends.
contribution.
I mean,
Right.
yeah, it depends. I mean,
Yeah,
possibly
yeah.
we could be, but as the mayor tried to express, there's a large pot that's out there, and we have one little slice of it based on the factors that are attributed to the city of Brigantine. Now, do we know when that payment will end? No, we don't have specific information like that. Not to bore you, but the Governmental Accounting Standards Board is attempting to have this very information be portrayed out there. So the state pension plan may in fact be responsible to show what Brigantine's future costs will be, what Atlantic City's future costs will be. So that's on the horizon out there. It's not something that's immediately available at this point in time, but stay tuned.
Okay, but I mean, as long as there's money there, then we will be responsible for paying into that fund based on a percentage for that employee until he dies.
Every employee.
That's right, every
It's
employee.
like Social Security. We all, now, I don't know
No,
how
I
you
just wanted to
attribute-
make sure that I understood in my own head just how long this goes on in terms
Or
of...
if there are survivor benefits, how long as their spouse is given the survivor benefit.
And that goes on. Okay, so, wow, thank you.
But just so we're not confused,
Well, that was the purpose of this. I
Right.
wasn't.
it's not specific, my
You don't receive a list
list
of
that says your
Brigantine
part of the
retirees.
payment goes to paying for, it's a statewide pension system.
I understand.
So the person who retires from Newark is in the same pool as the person who retires from Brigantine.
I understand. Yeah, I got that. I didn't realize it was that long, it
Sorry.
extended for that long a period of time. Thank you.
Thank you, Mrs. Phillips.
Well, I just wanted to tap on a couple other things that
Sure.
Ann had said. The Director of Public Safety in the budget line item where it has the 110,000, that was just a budgetary number. That is in no way, shape, or form any kind of increase in a Director of Public Safety's salary. It's just I wanted something in the budget with a little bit of a cushion. And also with the 42% increase that we were talking about before, that was in the paper that Ann brought up. That is, as Mike was explaining, you know, that there's a calculation between the assessed valuations and the tax rate. And what it looked like from George, who was our vital representative, just if you're looking at the 2013 numbers and not the 2014 increases at all in the budget, a person would have to have a decrease in their assessed value of at least 20% to break even and start seeing a decrease in their taxes. Now, the 42%, when you're doing this calculation, you have the assessed value goes up. Naturally, the percentage is going to go up, and that's where that 42% increase is coming from. However, what we're really looking at, like Mike was explaining, is that we have an increase in our budget dollar amounts of approximately 1.7 million. And that's what we need to focus on, and that's just to keep operations remaining the same with respect to the increases that we have. So we have the increases in the pension, we have increases in other areas that make up that 1.7. But council, I think, has been very clear to me, especially, I would say, Dr. Kern, that they want that amount to be at the same budgetary amount as last year, which would be the 22 instead of the 23 million. So at that point, if we're able to keep that level, and somebody had a decrease in that 20% in their assessed value, their taxes should remain the same or close. And then anything below that would be a tax decrease. But what we're looking at is reducing the budget at this point by 1.7. And I can't say that I can do this at this point, but we've been working very closely to figure out ways to do that and stay stable without, playing any games with the budget.
Okay, is there any other public comment? Yes, Mrs. Dragon.
Barbara Dragon, 404 30th. I think we should all give a big applause to Jennifer Blumenthal. This is the first time that we've had a meeting like this. This is the first time that we've had to look at the draft the budget before the budget would be presented, it would be voted on, and that would be it. It's online. We could look at it online. Today we could discuss how we feel, and I think that we all owe Jennifer a big round of applause.
Thank you, Mrs. Dragon. Any other comments? Yes, Joan.
Joan Reese Evans, 1419 Bayshore. I'd like to add to what Barbara already said and thank the presenter because I think he did a wonderful job. The way his presentation goes, it keeps you awake and it keeps you focused. Well, I think that's very important. So I'd like a round of applause for him.
Thank you, Mike. And if I were observing you as a teacher, I'd give you a very distinguished grade. Very good job.
You have a job opening for me over there? Thanks.
A gold star.
We're going to move now, I guess, to council looking at this, and going through, as has already been stated, we have met in small groups. I want to start by, first of all, thanking everyone who made comments today, but I'm going to start some of the discussion by saying that I agree with Mrs. Phillips that we need to work toward reducing the number in this budget, and I think we can get to zero and make this budget work so we can have less of an impact on taxpayers. And I think last year we tried to lessen it as much as we could. There was some money that I believe was paid forward into this year, so it might help us to bring this budget down. So I have met with Councilman Simpson, and we've gone over this line by line. I'd like to just throw out some suggestions and to the rest of the council members and to look at some specific line items to get some feedback. First one is on sheet 5 of the budget, this Garden State Trust. We're not listing that $15,570 in this year's budget. I would imagine we're getting that again. If we could insert that back in as a revenue.
Well, once again, Mayor, when we met in small groups, I had advised you at the time that the funding for that was based on pending due to the change in the way the state was doing their budget. Subsequent to those meetings and subsequent to February 7th, we jokingly said that $15,000 wasn't that much, but in fact, we will be getting that $15,000, so that will already be factored in to the budget as introduced.
Okay, so we can add that back in. On utility surplus, on sheet 10. What are you looking at?
You need the budget.
You need the budget, that's why. Yeah, the detail wouldn't be in what you have in front of you. On utility surplus on sheet 10, last year we
$235,000?
Yeah, 235. could we take another 100,000, add another 100,000, or take 100,000 out of that?
Well, up on the screen now, we have the surplus from the water sewer utility, and as we had sort of already discussed in our small sessions, that it would be the intent to have the introduced budget utilize $235,000 again.
Could we add another, could we do 335, add 100,000 to that? so that
You
we're-
could wipe out the surplus
Well, I don't
if you
want-
wanted
What
to
I'm
do
getting is,
that.
can we put it back in as we did in the prior year?
Right, just, you certainly can do that suggestion, but now, once again, you have to then look at the impact that that has on the water sewer utility operations and whether or not that will necessitate an increase in the water and sewer rents. So it depends on the factors in terms of what infrastructure improvements you may be considering. So I would say that you certainly could look at that, but you need to forecast what 16, 17, 18's budget would the impact on that. So, but certainly it currently would be available, Mayor. But with caution, we would need to look at that a little bit more and get a little bit more feedback as to what the water sewer budget is trending to.
One quick question about that. With all the construction going on, and would that affect the water and sewer rents if people are disconnected? And have we projected, would there be any change there?
Well, if we're not getting in the water sewer rents, it would reduce the revenue. But however, we did have a lot of lines cut last year after Sandy, and it looks like we held strong with the water and sewer revenues coming in still. So I'm not seeing any type of issue at this point with the generating the revenues. And a lot of that came about is a few years before my time here, they raised the rents in the water sewer, which really helped increase the surplus and make the fund more stable and allowed us to move some of these funds over to the current fund.
Okay. Just a suggestion, if we could, take a look at that.
I think it's a good idea.
In the tax office, which is on sheet 13, we look at tax assessment administration. Could we decrease that since we have someone who is not in that position right now? So $40,000.
Mayor, just one thing when you're addressing the specific line items, it's the manager and the CFO's budget, so.
Okay.
Certainly, I mean, I can give you a theory, but
Right.
I'm not here for the specifics as to who you operationally have. Right.
Just throwing out.
Yeah, we've been working on, the salary and wage numbers aren't firm, they're close, but there's going to be some changes around. But I think that's a good point. We worked on this, and I can reduce the tax assessor salary and wages by the $43,000, which would have been the deputy's salary minus what we've already paid and paid out in accruals.
Hopefully we'll have less appeals,
Yeah.
and less action hopefully in that office, that might work.
I think we're fine
Yeah.
in that office. I think we needed the extra staff during the time of heavy appeals and revaluation, but moving forward, we're okay.
While we're on that subject, there was the same amount of funding going into the fire department, and we lost, I believe, to retirement, 7 firefighters.
That, the number in the fire and salary wages is based on year-end numbers. I need to add in, I think it's 5 or 6 firefighters, either full-time, part-time, or somewhere in between, but I'm estimating approximately $300,000 increase in that salary and wage
Yeah, but we
budget line item.
probably lost about $800,000
Well,
in salaries.
when I
don't worry.
calculated it out, because it's not as cut and dry, because some of the salary and wage numbers that was put in there by finance include some payouts that we did in 2014, so it's,
So hopefully we can come to an idea of where we want to be with the staffing in there, and then that'll reflect in that
yeah, I'll
number.
have something in the introduced budget, actually, probably about 300,000 higher that's in there now, and it will give us some flexibility for full-time and or part-time.
On sheet 15, did we actually get that type of a bill increase from the JIF in basically workers' comp?
No, that needs to be allocated out, I think, at this point, after looking at it, moved into water sewer. It looks like we applied everything to the current fund at this point, but about half of that would be moved out into the water sewer utility.
Right, so that's over 300, it's about $300,000 in difference right there.
Yes,
Yeah.
that scared me as well when we were going through the talks with the auditor. It looks like it just needs to be reallocated to some degree to water sewer.
Right, we had questioned the bill at the time that we had put the budget together, but once again, if we do allocate that cost to the water sewer utility, then you're going to need to utilize more surplus to balance the budget because unless you anticipate a rate increase, we are pretty much at the max for realizing revenue for water and sewer. So keep that in the back of your mind. That's why the issue with using another $100,000 from the water sewer utility surplus needs to be reviewed because we knew that cost was probably going to be reallocated.
When you go back to salaries in public safety, which would be sheet 15A, the public safety director, obviously we have a referendum that's going out, but we're budgeting $120,000 for that position. And you already stated that may not be what the salary is, but it may be what the salary is. So can we, just as a conservative budget, if the individual's making 70 now, if he's going to stay, can he stay at 70 or is he going to move to 110 or 105?
Well, if it becomes a permanent position, the salary ordinance starts at 105, so it'd be 105. But in this type of department, I can allocate some of, let's suppose, the secretary or the administrative assistant salaries, that's what that will allow me to do and put some of the expenses under that instead of the fire or the police. But it brings up a good point, what's not in this budget too, which if the referendum ends up going through, I would need to move some of this money anyway over to pay for the special election. And we don't have concrete figures at this point. I know Lynn was working this week trying to get some figures. Did you have anything by the end of the day yesterday?
No, I talked to the county clerk's office, and he said he really didn't know. I said, well, how about 20,000? He says, oh, he says, I think I'm really low on that. So that's the last I heard.
If it could be held off to the general election, would the cost, most of those costs would go
Legally,
away?
you can't hold it off, though.
Well, I mean, it's possible if people agreed to, if the committee in these next 10 days could
Well,
say that they would
Let's
extend
think
it.
about the logic of that. You're going to pay someone $105,000 and we're in a salary, and we're going to hold it off until November. Why not have the election and figure out whether you have the position or not?
No,
And
nothing-
did I
it would stay at
misunderstand, or are
70.
we talking about an administrative assistant for the public safety director as well?
No, what I'm saying is, like, for instance, we have the fire department, then we have fire prevention. We split up some of the cost, administrative type of costs, in between those two departments. So what I'd be able to do with this is have the salary, like, let's suppose the administrative assistant that's already in fire and all of that's applied to the fire department, I might be able to apply some of that salary into the public safety directors. She would be doing some of the work for that department as well.
While we're talking all about that, the police department has a 7.4% increase in salary and wages, and we haven't got a contract with them yet, so I don't know how their salary and wages could go up if they're...
Right, when
Yeah.
they calculated everything at the end of the year, I asked finance department to be more heavy-handed than light-handed. I'd rather have to decrease things than increase things. So there's areas to decrease this because when they calculate, I believe they calculated everybody getting a 2% raise and everyone getting step increases and everyone getting longevity increases. And as you know, the legislation came through earlier this year or last year where Atlantic County had fought legislatively saying if there's open contracts that then union employees would not get step increases, not get longevity increases. So we applied that. So actually, even if something goes through, that is something that I can move with. So I can decrease that.
Right.
But could you possibly, like, over, if it goes for another year, I'd say, can we just figure what increases would be and put that aside like we're doing for the retirees?
You mean put it as a separate line item?
Yeah, so we have, we have it banked.
Yeah, no, we can, I think we can do a separate line item. Would we be able to, or would it, or maybe just a separate line item of salary and wages too under the, or separate it out in the sub-account?
If they think we get a 1% increase, put 1%
Would
away.
that affect the bottom line, though?
Yeah, absolutely.
Yeah.
If you do a separate line item?
But you would have the monies when so we don't have to go back 2 or 3 years and pay these people.
You'd have the money anyway, it would be in surplus.
Well, that,
But you're,
No.
looks like you're,
you're gonna use some surplus.
Hmm?
Surplus is,
Yeah, the
3.2
surplus is trending down.
$3.2
so-
million was borrowed, and we got $3.1 million in there. So-
Right, and
And we
it-
have to make payments on that, too.
Exactly, it's
Yeah.
trending down, so, I don't know, Mike, how far out can I have a separate line item for something like that? Would it have to be still within the police's salary and wage account, or could it be a whole separate account?
no.
Well, what we can do is we can review the flexible chart of accounts, Peggy and I can, and get you a better answer for that, so.
Okay, so what that would mean is that it would probably be still in the salary and wage in the budget, but we would have it broken down. If you look at our admin system, you'll see with the salary and wages, it will say overtime, salary and wages, other things like
Yeah,
that.
we could put like
as a sub-account.
$125,000 in there and put $200,000 back into the, to decrease the budget. Some number
Oh,
like that. I don't know
I
what
don't
your
think it
number
would
is right now.
decrease it, it would just put in a different account, but it would still be in the
Well,
the
the
main
whole
budget.
327 or part of that?
If we want to keep it in the budget, yeah, it would
Right,
still.
but you're up, it looks like $327,000 in that area, so
7.4%.
you could
Yeah.
probably reduce that pretty significantly.
Yeah, I'm planning on it.
Right.
Since we didn't have the fire, we wanted
We-
other salary and
right.
wages that I could offset things
Just
with
to,
by the time we get to the
The one-
introduced
if they're
budget.
negotiating and they see an extra 327 in there, they're gonna,
Wanna take
they wanna take it. So,
Well-
you know,
Oh, yeah,
obviously.
so I-
we
The
wanna
one,
take that out.
the one issue with having the separate line item, which would be called salary adjustments, you'd be pinpointing, you know, the dollar amount that you set aside also, so.
Right.
No matter what, it's gonna be part of the budget, and it would be disclosed, so.
Yeah, and it would be, you may not wanna do that.
Right, well,
Yeah.
Yeah, let us work on it a little bit more.
Another one I see in here is the fuel. The fuel was $155,000 last year, and we're budgeting $225,000. Can we cut that down to like $200,000, save $25,000?
Yeah, let me look at all the
Because I
fuel.
don't see the trend going up, that it's
Mhm.
gonna go to $5 a gallon or four
The fuel,
4.50.
well, some of that is because we have a reserve of about 50,000, and those reserve numbers could very well be invoices that we hadn't received yet. So if we bought fuel in December, we wouldn't be paying that out till January, and this number is as of December 31st. So let's see what we actually paid.
Actually paid. and,
Yeah, for fuel that
you
came
know,
in.
maybe put 20% on it, and
But yeah,
and whatever, the rest can go over, back into the budget.
But you're right. I mean, you look at the utilities, and all the utilities have gone up slightly, but they're not really trending upward.
Not blowing it,
Right.
not rocket.
Not a lot, you know, maybe
Right.
$5,000,
Right.
but, so.
Just out of curiosity too, the accumulated leave, which is on sheet 17. It looks like we have $335,000 still in there that was
No.
unspent for 2013?
For the accumulated leave?
Yes.
No, we shouldn't have anything.
well, but remember, if you're looking at sheet 17 of the budget,
Right.
we started with an appropriation of 200,000. We did the special emergency, which we're raising over a period of years for 588,000, and that 788,000 was turned over to a new trust account. And as of December 31st, there was roughly 300 and some thousand left, $335,000 left in that trust fund. But I think in the conversation that we had with the city manager, part of those funds are already spoken for. And she had advised me, I think, via email, that there was some additional payouts that she expected in 2014. So in fact, she thought maybe the 200,000 may be insufficient.
So
Yeah.
you're going to leave which would be 5-something in that fund?
No, that 5-something has already been spent from the
I mean,
retirees
you're
that
going to
we've
put
had.
200,000 in, you have 300 that's unspent?
Well, once again, as a timing issue here, as of December 31st, there was 335,000 left in the accumulated leave trust fund. The trust fund is not on the budget line item. So if you're looking at sheet 17, it says paid or charged is 788.
Right.
That 788 is what's transferred over to the trust fund, and the physical disbursements are then made out of the trust fund, not through the
Do
budget.
we need another 200,000? I guess the question is if you have 788 sitting in there.
No.
No, you
we
have
absolutely-
335
35, brother.
as of December 31st, but there could have been payments made in January and February
When-
relative to that.
don't have that?
When that full amount was calculated out, it was for all the accruals. So
Right.
if there's something sitting there, it means it got paid out and it needs to be transferred over. So there wasn't extra money put in that account. And the 200,000, I just had emails, I think, with Mike and Peggy about that. I'm concerned that that might not be enough because the superintendent of public works, his accrual is getting paid out of that. And then in addition, we have 2 possible more retirements in fire. And if we have both of those, that's not going to cover those 2.
Aren't we
So-
paying the superintendent of public works out of the salary for this year?
Yes,
I
some
mean,
of
he was
it.
budgeted this year in the salary line.
He's getting paid his salary under terminal leave, but remember, he got an accrual payout that he'll get after the adoption of the budget. It was for sick time.
I thought that's what the
But there was
terminal
an
leave was.
additional. He had more than the,
Really?
But there's a payout at the
Yeah.
end of his terminal leave.
yeah, there's a payout.
Do we know what that amount is?
I don't know offhand, but yeah, that's gonna be coming out of the 200,000.
Well-
It's in the agreement that we signed.
Okay.
So, and then if we have the 2 additional retirees in fire, which is not definite, that amount's not going to cover it.
Then the other area just thrown out as a suggestion would be the reserve for tax appeals. We have 400,000 in there, which is sheet 20. With the reeval just being completed and everyone basically going through the process at this point to work with the reeval company, we really, I feel we could reduce that by 350 and, leave some in there, but you're not going to have the tax appeals. Everyone's had a shot at coming in and doing that already. So do we really need to have the $400,000 in there?
I was afraid, that was a concern of mine, that wasn't enough, because I think we are going to have some tax appeals this year. People have until May 1st to apply for tax appeals. Has there been any projection of what
Well,
that
they've already
possibly-
been in to talk to the assessor.
But for the county tax appeals,
Right.
400,000 has me concerned that that might not be enough because we've already borrowed twice, and again, you cannot borrow again.
Yeah, wink, wink, nod, nod, probably not, but we were told we couldn't borrow after the first time around.
Right.
So,
By the
But-
time we have adoption, I think we'd be able to modify the number.
So you think we could modify that number on the tax appeals?
You'll have some idea by then.
Right, I mean, the
Yeah.
process is a little unusual because we just had the reeval. It's not like a normal year. I think most people who got their assessment have come in and met with the reeval company at this point, if they didn't agree. What's your sense? Did they work it out with most people?
I believe so. I think we have like a pocket of, concerned pockets of people that, are going to look for the appeal process to move forward. But I'd say 95%, the reval is the accurate numbers, and that's what we'll be moving forward with.
Just a question. Normally, the deadline for appeal is April 1. And am I correct that this year it's going to be May 1 because, right. So I think it's prudent to, at this point, wait until we have some sense of, where the appeals are going. Just like last year, we were pretty adamant about, keeping that money in there because we felt that we thought maybe we would have a reduction in appeals, but in fact, we ended up with $1.8 million. So I think it would be prudent to not make that line item change until we have a sense of, what, the amount of appeals that, may be forthcoming. Certainly, if we feel that it is not necessary, then I think we'd all be in agreement of making some sort of reduction, but I think
That's
we
fine. I
need
just
to
wanted to throw it out there as an idea to see what, because it is an unusual year having gone through the reeval.
No.
We don't know.
I agree, and anything to reduce that 1.7 million is helpful.
And then the other thing is, we talked a little bit about surplus. And I
Yeah,
know
well,
Andy's looked at that.
surplus, since we have, Scott, I can't see Mike.
you're better off that way.
Since we have, plenty of surplus, why don't we take another 300,000 out of there? And, basically you're gonna bring it down to a 0% increase if all this stuff can come true. And I know you, Mike, and Jennifer can work on some other things and maybe get it, we don't have to take as much out of the surplus, but, there's another $300,000 I think we could take.
Well, the only suggestion I have is to make sure that we have the firm appropriation side of the budget. And then when you have the firm appropriation side of the budget, then we look at targeting the one-time use of additional surplus, things like that, that you can marry it up, because the last thing that you want to do is drain that surplus down to zero, because as we've been talking earlier, the surplus, even though it's at its peak over this 5-year history, as you can see on the screen over there, it's still made up of the borrowed proceeds. So even you had addressed that earlier. So certainly that surplus could be used. It comes down to whether or not we can marry that up to
Again,
offset it.
It might not be 1.3, I'm sorry, $300,000, but it's a combination of everything in here. We can get it close, and you come up with more ideas, Jennifer and Peggy come up for more ideas, and council.
Certainly we can look at it as we
The
did
whole
last year.
council as a body.
Actually, I think you two came up with pretty much all of our ideas already, but,
Jen, one other
but
quick question about
in
the
addition-
liability insurance too.
Yeah.
Is that from the JIF it went up that much? Did we get a
No,
bill?
what happens is it gets allocated between the current fund and the utility fund, and everything was allocated to the current fund in this draft budget. So once we allocate the percentage that we're supposed to over to the utility fund, which comes in on the JIF sheet,
Because that's like
we'll
a
see what the-
$100,000 swing,
Yeah,
just in the cost.
Right, because
Yeah.
it was all allocated in the current fund, usually gets split up between the
Okay, so
current
you
and
see- okay.
utility, so you're seeing the whole amount that we're paying, the JIF in one fund instead of being split into two funds, but
So
I
that
don't know
can
if
go
it's a 50/50.
back in the utility, you think?
Absolutely, it was all put into the current fund.
Okay.
And the only other item that we're really looking for right now, that we're working with the county on, is what Mike had tapped on, is with the road construction work that was on Brigantine Boulevard. We're trying to get them to commit to pay over the $500,000 for that, and then we would able to put that in as revenue too, which would help. So we're working on that now.
Good. And just, I know one item that's come up many times, and there's been a lot of discussion about it, and actually Councilman Palella brought it up as part of the public safety budget, the dispatch. And there has been a move, as you know, for the countywide dispatch, but that's not going to be a reality for a couple of years.
4 or 5 years.
Yeah, it's going to take
At
several
least.
years. So, I know some people have looked at that, and it's been debated over a long period of time. It's going to take, it may take that long, Joe, before it ever comes together. But I think we finally have an answer on how they're going to fund it. And that is, it's going to be part of the county tax. So at that point, which has always been the issue, how are you going to fund it? Because if it's definitely going into county tax, we're going to be in a situation where we're going to have to make a decision not to duplicate a service that is already at the county level. But it's not going to happen overnight. It's going to take a couple of years to happen.
Well, also, Mayor, having said that, it would appear to me that we are also moving to a county assessment system, which means that in the near future, we'll probably eliminate our tax assessor's office because that will be a countywide service, and there'll be some addition onto our county tax, but it would also save that revenue or that expense line item, will be gone. But that may be another year or two. But we are moving in that direction.
Yeah, that's up to even 3 years away before they even start to initiate it.
Well, there's
put
a
personnel
pilot,
in place.
there's a possibility of a pilot.
No, the pilot, if you look at the way the legislation is written, the actual transfer of personnel isn't going to be until about 3 years.
It does take time to absorb that cost, but not to go off on that tangent, but if we're going to, there's the Monmouth County plan and then the Gloucester County plan. It's kind of interesting because it has a lot to do with what we just discussed about tax appeals. I believe the Monmouth County plan changes the date for tax appeals. So tax appeals would occur prior to the adoption of your budget. So you'd know when you did your budget what you'd have to fund. I think the Gloucester County plan just leaves it the way it is. I don't know if you had any
Well, I live in Gloucester County, actually, and we have the dispatch services, and my former community was one of the last ones that actually converted over to the system. But I live in a community now that actually was part of the assessment process, and they phased them in. And one of our other clients in Gloucester County, for the first year, did have a budget appropriation, and then this subsequent year, now they're in year 2, they have just, no funding in there. But the timing of the appeals, presumably you would have that information in advance of your budget, presumably.
Yeah, and that would be,
But we thought we had that information last year from the county here as well. Then, of course, the Atlantic City refunds impacted us after the fact that we didn't have calculated into our budget as well. So.
and that is the biggest advantage that I see, is to have the county involved in the process, especially with what just occurred in Atlantic City. It would have been a very different outcome, I think, if the county were involved in that process early on. Them not settling those tax appeals and going to court, actually, they lost. And all of us are paying the difference. The other interesting thing, too, and I don't have the sheet in front of me, but the percentage that of the county tax rate that municipalities pay was in the paper recently. And even though our ratables are down, we still pay a pretty significant amount, because it's based on ratables, of the county tax, because we're still one of the strongest ratable bases in Atlantic County.
Yeah, they'll go through their equalization process as they did last year. They gave us a preliminary number last year. Then they had the Atlantic City refunds, which weren't factored into that number, and so therefore our allocation actually increased as a result of that. So at this point in time, the county, as I said earlier, did adopt their budget. They'll go through the equalization process, and I believe there was just a news report where they were interviewing the county tax assessor just the other day, and they're waiting for some final numbers to make sure that they have the refund numbers ready to go. So we should have a better picture within the next 2 weeks as to what we feel the county allocation will be.
Jen?
Okay, any other suggestions on the
Yeah,
budget?
a question. When you work with the figures looking at salary and wages, do you figure in all of the anticipated retirements and how they're going to be, those positions are going to be refilled, or do you just leave them the way they are?
All the salary and wage numbers were from year-end numbers, and that's why something has to be added in for the firefighters, because we had some retirements. But we are doing rehiring because we're not reducing staffing levels.
But I mean,
So-
that's figured in, correct? Or do you leave it the way it is?
No, at this point, everything is based on 12/31/2013 numbers, and then it needs to be adjusted for the 2014 year, as what we know up until the point that we introduce and adopt the budget.
And Joe, that's a great point, because the difference between a person who's leaving, who's retiring at the top of the salary scale,
Right.
The breakage between the two of them is a pretty
It'll add up.
significant savings.
It'll add up.
It is.
Now, would it do the city any good if we put in the code a rule where people had to announce their retirement by a certain date, and then were bound to?
Well, in the union contracts right now, they state that the employee does have to notify the city, but they don't have to.
they're not bound to it.
Actually, they're not bound to it, that's correct.
But if we put it in the code, and then even going forward in contract negotiations, would that
We can
help?
negotiate it in contract negotiations, but putting it in the code would not supersede the contracts that are in place.
Jennifer, last year, this year, it's come up many times. People have asked me about maintenance of the fire hydrants. Where would that fall under appropriations? Is there going to be some money?
I think they were just going through, the fire department just went through, tested everything, and now the Public Works is working on maintaining them. It's not a separate line item. It would be in the respective departments' maintenance, just like we maintain other things throughout the city.
On the golf course, when
Mhm.
Public Works does work at the golf course, is that charged off?
No, I believe what Mike was saying when he was working with the CFO, we don't do any allocation in the trust fund for the maintenance that Public Works does in the golf course. Where that is budgeted for is in the current fund.
And where?
In the current fund.
Thank you.
The capital improvement fund, I have a question about that. Last year, we only had $1,000 in the capital improvement fund.
The capital improvement fund is the 5% down payment that we have to put towards any bonding we do. Mike, what would the $1,000 relate to as far as bonding, full bonding
Well,
numbers?
Well, not much, you would just get that number, but I think, just to clarify where we stand now, as of December 31st, 2012, we had $302,000 in that set-aside money. During 2013, we did a bond ordinance where you needed a significant down payment, and we used $200,000 as the down payment, so that left the fund at $103,500. So we're looking to replenish the account by putting $50,000 in, but that's depending on what the capital plan is. At this point in time, I think the finance office is still putting together their capital plan, if I'm not mistaken. Not that I want to put words in their mouth, but that would give you $153,000. So that would help us if we were doing roughly a $3 million bond. It really depends. You want to put some of those funds away for future capital costs, because in the current fund slash general capital fund, you need to have that 5% down payment.
Mike, I have a couple questions. In this graph,
Yes, sir.
where the borrowing capacity of the city has gone down, it's gone down because we have had lesser value each of these years, and that lesser value is because of tax appeals in those years?
Well, what?
So that, for instance, it went down from 2009 to 2010. We didn't have a reval, but we went down in value. We went down in value because of tax appeals.
Right. The borrowing capacity is actually based on the equalized valuation over a 3-year period. So therefore, they take into consideration the last 3 years. So when you do that, multiplying it out, the equalized valuation is considered to be what you truly are at market value, as opposed to what your assessed valuation is. So you're using 3 numbers over a 3-year period, dividing that out and then multiplying it by the 3.5%. And as you've trended down through the years in terms of quote-unquote market value, that is why the number has trended down. It's based on this equalized valuation number.
So
not specific to appeals, but
do appeals play into it is what I'm really asking.
in a roundabout way, yes, because what you're doing is you're taking, through the appeal process, you're taking what's currently assessed, using an appeal. The appeal is bringing you to or closer to the quote-unquote market value, and that's really what that whole process is about, and that's when you multiply them out. Because you're getting closer and closer to market value, you're trending down. So at some point in time, the market value of our community was a lot higher.
Okay. And then,
I'm sorry, Doc.
Go ahead.
Good. I was just going to mention on another, the bottom line is significant too, is that
That's the net
stays
debt.
pretty stable.
Right.
Correct.
Which is, I think what you want. You don't want to see any huge spikes. And if you can stay with, kind of a flatline approach to that,
Right.
as debt is retired, and it's going to stay as a pretty constant in your
Of course,
budget.
the audience goal would be to have that trend way down, but from a realistic standpoint, to maintain the infrastructure, you're correct, Mayor, is trying to keep it as stable as possible.
and in this, it's manager's budget impact. Right. So if in fact we had a amount to be raised by taxes that went up by $1.7 million, there would be in fact a 10% increase in the average taxpayer's real estate tax. $236 over $2,400, almost 10%. Is that correct?
Well, there's a lot of factors, but once again, that's a mathematical calculation that would work out to be
Almost 10%.
Right.
So I think most people in the audience can't figure out how their taxes can possibly go up 10% when there's a 2% cap. So I would ask you, while you're here, to just quickly explain what we have, what's in the cap, what's out of the cap, and why this is even possible.
On the screen now, we're looking at the analysis of 2014 manager's draft budget. So just comparing this year's levy versus last year's levy, you can see that we have a 7.85% increase. So this perhaps speaks to what Dr. Kern is addressing. How can we actually have a $1.7 million increase when there is a 2% levy cap? In the draft budget online, we did not provide that sheet simply because we're still going through some of the calculations. But based on the debt service increase, you're permitted, if there was a 10% increase in our debt service, which if we jump to debt service increased on the municipal side 11.8%. So if you see that on the screen, we've got an 11.8% increase. Certainly well above the 2%, but in an effort to maintain the stability and keep your bond rating, they put in there the exception that any increase in your debt service would be an exception and can go up and beyond that 2%. So that's one of the driving factors as to why we can have a 7.85% increase. Another factor is, I think Councilwoman McClay addressed capital improvement. You can see the capital improvement went from $1,000 to $50,000. That increase is also permitted to be extended beyond the 2%. But one of the largest factors that is giving us this 7.85% increase is, in fact, utilizing the levy bank that we had from last year. When we were sitting here, we ended up ending the year with roughly $1 million, $1.1 million, I think it was, off the top of my head, trying to remember these numbers, that we did not utilize, that we did not pass on to taxpayers because we were able to keep the budget where it was because of other revenue processes. In this budget, you need to utilize the levy bank of roughly $700,000, $800,000, I think it was off the top of my head, to get us there, and that's why we're able to go beyond the 2%. So once again, an exception that is permitted. You would not have that room next year because you pretty much utilized the bank at that point in time. There'll be only a minimal amount left over.
And a couple other things. The mayor brought up page 17 and questioned why we would, how much is left in that trust fund. And I think that knowing what we know about future retirees, I would suggest that the $200,000 that we allocated is no longer sufficient, and that in fact it ought to be increased to $400,000. Perhaps you can get it from some other place in the budget, but we know for sure that this didn't cover us this year, and it probably won't cover us next year. So to make the budget more true as to what we're really funding, that number probably ought to be increased and not decreased or eliminated.
One of the conversation points that I think we had with the groups was at the time we didn't know where the appeal process stood, and we felt that we were going to leave the $400,000 in there as we get more information, as opposed to eliminating that line item or reducing it dramatically. Part of that would be moved over to the accumulated leave number once more information was received by the manager's office.
If I could just add a comment on what Councilman Kern just said. In this coming year, in 2015, we have quite a few people in the police department and fire department that are hitting their 25 years and in all probability will retire. So I think there's some merit in increasing. If we're going to decrease the amount that we've allocated for tax appeals, we may want to move some of that money over into the unfunded liability for retirees, as we did in 2013 for the first time in our history. I think it would be prudent because we are seeing that more and more people are approaching, their 25th year, and obviously this trend will continue. So that's a very good point, and it should be something that we should really consider increasing that.
You
And-
still
and
have,
you may have some room too, once you adjust the salaries for, you know, what the actual salaries will be.
Yes.
You know, right now, we're based on 2013 numbers. So once they're adjusted either by the number of staff members who are there and the actual salaries for replacements, you'll have a better idea where you need to be.
you also, at that point in time, if you have a significant outlay again, you would have the opportunity to go through the bonding process with a special emergency. Because as we addressed before, the benefits that these individuals have earned was not done in 1 year's time period. So the state does permit you to utilize the ability to borrow the funds to pay the employees, as we've been through here before with the timing of when they have to be paid for IRS purposes, and it would give the city the opportunity to raise that over time because those benefits had in fact been earned over time.
Yeah, I think council and myself as a whole kind of want to get away from the emergency appropriations and get a line in the budget that will actually supplement at least most of these accrual costs when we move on.
It's almost like the tax appeals. If you have the tax appeals before, you have to have the budget. So
Right.
if you know what the retirements are, we just put whatever amount that is into the budget for that year.
Well, what has to happen too is you need to put in contracts that if you don't notify the city by a certain date, you don't get compensated in that year. So it's simple as that. You'll know in the following year exactly what your liabilities are. You know, if you have a date that says, and you'll figure it out, I would think it would be relatively soon, right? Around this time of year when you're
Right.
developing
Well, I
the.
didn't negotiate that. I think but also.
But you understand what I'm saying? We would know exactly
would
what we
know.
would have to pay. And if you didn't notify by that date, you have to wait until the following year.
No, that's good too, but like, so, like for instance, Atlantic County, they'll have an amount that's high, you know, for this accumulated leave. It's considered a conservative budget. It helps increase our bond ratings and so forth. Whatever's not used will go into surplus. But leading up to that, we have to be, I guess, more exact. What ends up happening if we think we're going to spend 400, we want to put
Right.
400. But we eventually want to start making that number larger. In the first year, it might look like that we're taxing something unfunded, but what ends up happening is whatever's not spent goes back into the surplus. So once you get that figure in there, it keeps the tax base stable rather than having it fluctuate for these accruals. So that's what we can look for, but it's very hard in times when we're not flush, you know, when we're in an economic downturn, to start increasing these budget line items. That's where the crux of the problem is right now. So I think looking at what we're actually spending is something we have to do for the current years, but we have to look at increasing this budget line item for future years to keep us stable.
Mike, let me ask you a question too, in terms of how this is paid out. If you had, let's say you had 5 people in the police department decide to go this year, and you had a large, you had a liability there, it was rather large, and you had to go back to bonding it in short-term notes, basically. But can you use the amount from the uncompensated balance to pay that payment on that? Can that come out of that, or how does that work?
Well, no, what would happen in that scenario, if we ended up with 5 or 6 employees, and let's say it was just $1 million that we needed to pay out, we would borrow the $1 million, we would issue a note for that, we would get cash into the bank, and then we would pay these employees immediately in the year that they retired, so we don't have any IRS issues. So then what would happen is in the subsequent year's budget, you would begin to pay down those notes, and generally it would be by 1/5.
Right.
You're entitled to do it and raise it over a 5-year period. So the $1 million would be divided by 5, and you would just raise the $200,000 each year in that scenario. Just to clarify the manager's comment that it would go to surplus, she's referring to the surplus that's sitting in the trust fund. The trust fund is where you are now accumulating the money, and that's where the mayor was addressing the $335,000 earlier. So not general fund surplus, it's going into a trust account set aside for future payments.
So you would have 2 then, let's say you
Yeah,
budgeted
you would be
200.
currently budgeting for maybe current needs and helping to build up the trust fund, but in a scenario where you had a large cavalcade of retirees in 1 year period where you just can't do it in 1 year, you would probably opt for the emergency situation and then fund it through that process and raise that over 5 years.
It's a lot easier if we paid them out over time. Just make it.
Well, that would be a violation of the IRS rules, but we've been there.
Okay, any other comments on the budget? Anybody from council, or? Okay, I'll open it back up to the public.
Colleen McLaughlin, 332 14th Street South. I noticed that the grant money, $1,175,000, it looks like it was received in 2013, and do we not anticipate any grant money for 2014?
No, we did, as the auditor had said, all the grant information isn't in the budget, but that won't affect that 1.7 million because grant money is in and out. There's a corresponding appropriation to all revenue that comes in. But no, all grant funds are not in the budget at this point.
Okay. I was just thinking that maybe we could somehow increase our revenues by thinking about applying for grants, and also there's some city property that's sitting vacant that possibly we could use and for something and make some type of revenue rather than just having it sit idle.
We actually have in right now for a lot of different grant and loan programs, specifically for Sandy and commercial development and things like that. So we are actively seeking grants. We have a grant consultant, Jim Rotella, who's excellent and really informs us months before something's available that it's coming up. It's just that it's not in there at this point. The sale of buildings is something that council as a whole has discussed a number of times. It comes up periodically as a discussion item. I know there's differences of opinion what to do with that money. Some is to pay off some of the debt that we have. But when you're looking at selling buildings, it's a one-time revenue. So what ends up happening is you have it in the budget for the one time, and the really the problem with that is that you can't rely on that revenue.
Right.
So it doesn't mean that we can't look at it, but we have to look at when's the best time to sell it, look about how it's affecting our tax rate.
I was looking more at not sales, because I know you're not interested really in sales right now because of the market is somewhat down, but possibly using those vacant buildings, renting them out, and getting some type of revenue generated from them.
That's a good idea.
Yeah, I think it's a good idea.
You know, it's something we could look at. You know, you have the old Civic Center, and I doubt the place, the old library, but that's a maintenance issue.
Yeah,
that
the
building in
beach
itself.
tag we can. It's I know people were asking, and Johnny, safety coordinator, went there, and it's
Yeah,
not something we can put.
We really
people
should
in.
probably put some funds in the budget to tear that down.
Yeah,
and sell it.
we have 75,000 for
Right,
demolition.
So some demolition, so we can maybe sell it for scrap and
Something.
get some extra revenue that way.
Exactly. And I was also looking at the shared service agreements. I don't see any shared service agreements with other municipal governments, or, you know, Atlantic City or Ventnor. Perhaps they could help us with some of these expenses, that you had some service agreements that you would share some expenses with them?
We do a number of shared services. They're just not documented separately out in the budget.
Okay.
But for instance, the janitorial work we do here at the city is done through the school system. We have the ACUA who does our trash collection. That's actually contractual. You see that in sanitation. We have the AC, what is it? I was going to say IT, but that's not it. The Improvement Authority, who we work through different funding programs with as well.
Okay. So you didn't get a chance to put them in?
They're not detailed out in the budget.
Okay.
We also work with the county in doing, we do the snow plowing on the boulevard. They reimburse us for that. I think that contract's sitting on my desk to be signed, but.
Yes.
you know.
Well, actually, no, we tabled it because we're going to go meet with them to
Okay.
talk about new rates.
And then just one last item. The golf course, I see other expenses of $625,000, and I just thought other might be, maybe we could understand what the expenses are of $625,000 that golf course is using or anticipated to use.
They had submitted a proposed budget to the CFO, and it's broken down between the pro shop operations, card operations, marketing operations, maintenance, and then administration in operations. So they have a line item, a budget that they did submit to the CFO's
Colleen,
office.
I'm sorry, Mike. One of the things that we want to consider, and I know there'll be an RFP and there'll be a lot of information out there, but depending on which way this goes, is to privatize the food and beverage operation, you know, is probably something you know, I know we don't want it to impact on the RFP if that's going to go in that direction, but I think that's something viable too, and I think Meadowbrook has been very clear that they're not really food and beverage operators as opposed to some of the professionals who might be able to go in and take that over and make some revenue there and reimburse the city. Right now, we're not getting a lot of revenue from that.
Right.
And that would be something that would help.
Well, I was looking at Atlantic City and some of the revenue-generating ideas that they're coming up with. Like, for instance, they're just selling ice cream on the beaches or something. They had a bid out for several people, and
Yep.
they got quite a bit of money
Yep.
just to sell, you know, to permit people to sell ice cream.
Yeah, we started that last year, and Atlantic City in prior years, it went through the mercantile license. So this is
And
the
the
first time they're
miniature golf
bidding it out. We're looking at a minimum bid, I think it was 70,000 for this year, and we started it last year for the full season.
Right, so I'm just looking at some
Yep.
ways to increase the revenues so that we can balance the budget and maybe have some reserves that are decent.
Yeah, any ideas you come up with, we'd like to
Well,
hear
one
them.
idea
Yeah.
one more idea I want to put forth, and you'll probably hate this one. I'd like to see the golf course, something done with that as far as perhaps we can have a 9-hole golf course rather than an 18-hole golf course. Now, that might be a sacrilegious thing to even think about, but we could sell the other half of the golf course, you know, to developers and raise the money, and those that want to play 18 holes just go around again. I play in Pomona, and they have a 9-hole golf course, and when I want to play 18 holes, which is seldom, I go around again. So half of the golf course might be able to be sold.
I think,
Right.
Yeah.
Right.
I,
You'd have to
Well, I can tell you that I would not be in favor of that, and I don't think any of the homeowners out there would be either, but I appreciate your suggestion.
Mayor, plus we can't do that anyway, right?
Yeah.
but, yeah. But I think the idea of having rounds that are only 9, you know, rounds, that might be something we could offer for people. So, yeah, something we can look at.
Frank?
Frank Papa, 105 Roosevelt Boulevard North. In reference to the golf course, taking into consideration it's costing us $700,000 in this budget. It's upon you guys to make a decision quick, because every week that goes by, all right, we've already went past 10 weeks, so we already got a deficit of 150,000. And every week adds on 15,000. If we use the number that we got last year, and if we drag it out for another 6 months, we're going to be right back at the same place we're at this year, the $750,000 deficit. So I would appreciate if you guys work on this harder and faster and get this thing resolved, whatever way it's going to go. I know you've got meetings, and I know you said we should have all kind of public hearings. I think we got to move quick.
Well, Frank, I disagree with you. I disagree with you wholeheartedly. First of all, on your math, but secondly, that we have to have public hearings because you have thousands of homeowners who are affected by that, and you have a lot of people who play on the golf course who should have input as well. About over 30% of the play on that golf course is from Brigantine residents. And the math you're using, it's already been explained by the auditor, this is a budget year amount that has to be put in because you can't anticipate more than you took in last year. Last year's revenue was because of, I believe, the economy and also Superstorm Sandy, and how you quantify each of those, I'm not sure, but was a good $300 and some thousand lower than the year before. Would it have been that significant if we didn't have Sandy? I don't think so. I think our revenues would have been better. But you can't go fast on this because it has a huge impact on people's lives. And the other part of this too, it's a recreational asset. What we did from the beginning is we made the golf course self-funding, and it was self-funding for a lot of years. And I couldn't have predicted the worst recession in our nation's history, and I couldn't have predicted a superstorm. Obviously, we had the ability to be self-funding for a lot of years. We're not right now. But the point that I'm trying to make is no other recreational asset in this community, whether it's the tennis court, the football fields, anything you want to look at, do we make the users pay the debt service? There's no other recreational asset that we do that. So the golf course has done tremendously well when you look at it in that respect, that the tennis courts don't generate enough revenue to pay the debt service. I can tell you that right now. So we've done pretty well overall. And was the goal to keep it self-funding in perpetuity? Yes. But unfortunately, a lot of things changed over time.
Mr. Mayor, did we receive any taxes from the management company towards taxes this year, last year, or the past 5 years?
Any what?
Taxes. When it was a privately owned company, we received taxes.
If you have, now, I don't
wait
know
a minute,
this,
let
I
me
haven't seen
finish.
the RFP. If we put it out to an investor developer, they're going to pay rent. I don't think they're going to pay taxes.
No, they're not
It'll
going to
be-
pay taxes.
Right,
But
so it'll
can-
be,
Mayor, can I just, I wanted to address something that Mr. Papa said. Mr. Papa, we are moving forward diligently, and the mayor's right. You know, we have to do our due diligence and, you know, have public hearings, et cetera. But Meadowbrook currently has a contract that extends to September 30th. So regardless of what we do and how quickly we move, nothing will be able to be implemented regardless of which direction we go until their contract is expired, which would be September 30th.
So conceivably,